business app and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Where's your views on the municipal bond landscape?
The market does not like uncertainty, does not react well to uncertainty.
There's a whole lot of optimism around the valuation of Uber.
What is Ford saying about the self-driving car?
Breaking market news and insight from Bloomberg experts.
Maybe we're getting hooked on debt and low interest rates.
The black hole called power could be a bigger black hole.
Only buy IPO stock that you can't get. If you can get it, it's probably a dog you don't want it.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up over the next hour, this is going to come as a shock, I know, but U.S. consumer confidence plunged in April. We'll dig into the numbers and what it means going forward. Plus, we'll take a look at earnings from 3M and Caterpillar. Right now, let's get a check of markets that have rolled over. Greg Jarrett has that for us. Greg.
We got a red headline just a moment ago, Lisa, that we're getting word from a Dow Jones report that Boeing is facing criminal and civil scrutiny into years of widespread quality control problems on its 737 MAX assembly line. This according to sources, potentially exposing the plane maker to greater legal liability. Right now, the Boeing stock is little changed at last check. Stocks overall, though, are heading into the red. We look at those numbers every 15 minutes throughout the trading day here on Bloomberg Radio. After a solid open, the S&P is down 0.5%, down 14. Dow's down 0.3%, down 78. The NASDAQ is down 1.2%, down 103. The 10-year is up 14.30 seconds with a yield of 0.61%. West Texas Intermediate crude was in the green for a while there. Now it's down 4.7% at $12.15 a barrel. COMEX gold's down 0.5% at $17.1470 an ounce. The dollar yen is at 106.94. The euro's $1.0828, and the British pound the $1.2438. Southwest Airlines is looking to raise about $2.6 billion by selling shares and convertible notes, stepping up a push to add liquidity as the pandemic all but erases demand for airplane flights. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Lisa Abramowitz and Paul Sweeney.
Greg Jarrett, thank you so much. We appreciate that. As Greg was just reporting, markets are rolling over here after a strong open. But the Russell's hanging in there. The small cappers hanging in there a little bit better. Dave Wilson, Bloomberg Stocks Editor. What are you looking at in the world of small mid-cap stocks, Dave?
Yeah, hanging in there is about right, Paul. When you look at the Russell 2000 index, it was up as much as 2.7% in early trading. Now it's higher by just 0.1%. That said, it's doing better than the S&P 500, which is lower by about 0.5%. The Russell's biggest gain belongs to Syndax Pharmaceuticals, whose ticker is SNDX. The drug developer has jumped 59.5% after reporting initial study data for leukemia treatment. The medicine was designated as an orphan drug by U.S. regulators. Chico's FAS, ticker CHS, has risen more than 12.5%. The women's apparel retailer says it's going through less cash and will begin reopening stores next Monday. Decipher Pharmaceuticals, ticker DCPH, has added 16%. Now, the drug developer is pursuing a treatment for gastrointestinal tumors, and a competing drug from Blueprint Medicines failed in a final stage study. Blueprint has the Russell's biggest decline. It's down almost 20%. And Gaia, ticker GAIA, has dropped more than 15%. The provider of wellness videos had a wider first quarter loss and lower revenue than analysts expected based on the Bloomberg survey.
Dave Wilson, Bloomberg Stocks Editor, thank you so much for that update. This actually does not come as a surprise that U.S. consumer confidence plunged in April, but the magnitude of the drop once again gets your attention. It's the sharpest drop in this conference board reading since 1973, and went beyond the expectations, which really raises a question: how does this bleed into some of the spending that consumers have really been lauded for over the past decade? Lynn Franco joining us now, Director of Economic Indicators at the Conference Board. Lynn, can you just talk a little bit about where consumer confidence declined the most in the latest reading?
Well, sure. We saw a sharp decline in the present situation component. That dropped by more than 90 points, the largest drop ever. And it was really prompted by the erosion that we saw both in business conditions and employment. So I think that's not surprising. We did have a little bit of an uptick in the expectations. being powered sort of by consumers expecting an easing in restrictions and the reopening of the economy. But one striking piece of information here is that income expectations are pretty negative. In fact, the number of pessimists now outnumber the number of optimists, and that could really hold back spending in the coming months as we try to sort of gain traction in terms of the recovery.
So it's interesting. Just want to get a sense, Lynn, we've seen just this incredible job destruction over the past 5 weeks, more than 26 million jobs lost here. How does that factor into your model? That's just I'm surprised, actually, that expectation data point you suggested here. But how does the job market really fit into consumer confidence? It's got to be a big driver.
Absolutely. It is a big driver, and that's one of the main reasons why we saw a 90-point drop in the present situation. It was really, both the halt in economic activity and, the millions of unemployment claims that really sort of, prompted that decline. I think looking ahead, it's not surprising in a way that expectations have come up a little bit since, we've ground to a halt, and now the expectations are that we're going to see some easing. We're going to see a return of at least some business activity. So I think that gives consumers a glimmer of hope. Where they remain very pessimistic, though, looking ahead, is in terms of their own financial prospects. And that really could have some significant impact for spending. We've seen a sharp drop in their intentions to purchase an auto, a home, major appliances, even vacation intentions. So maybe while they're hopeful about the economy, restarting, I think they're going to be extremely cautious in the coming months about spending.
A lot of people have pointed to the speed of the job destruction and the speed of some of the reversals in the economic data as pointing to a faster recovery than in prior downturns. And I'm wondering what history has shown from your perspective about whether this mood will reverse if, say, jobs come back online and we do restart the economy and people start to see the other side of the pandemic.
Well, we've never faced anything of this magnitude. So I think from what we're seeing here is probably that we'll have more sort of a U-shaped recovery. And we say that because of the income expectations and the fact that we haven't seen all the economic ramifications of COVID-19 playing out. And then looking ahead, there's also this possibility of a second wave so that, the recovery in consumer confidence could be quite bumpy for several months.
Yeah, that's kind of where I wanted to get at, Lynn. It seems like the market maybe looking past that risk for, this virus to come back in the fall and the winter, some experts are predicting. Is there any way that's captured in your data at all?
I think we may see some of that in the coming months. I mean, this does mirror a little bit of what we saw sort of during the Great Recession, where we were sort of on this downturn and we were in a recession. We began to see a little bit of an uptick in the expectations, and then Lehman Brothers occurred, and then we had another collapse in consumer confidence. So I think, we need to watch this over the next couple of months. It's most likely going to be a very bumpy road, and it's too soon to say is, sort of the worst behind us.
Lynn Franco, thank you so much. And Paul, it definitely is going to be interesting, Lynn Franco there with the conference board.
Yeah, interesting. It's going to be very interesting, Lisa, to see kind of how this plays out. Obviously, the sharp contraction we saw in April certainly understood, but it's interesting. I think a little bit better outlook for the near term, which is certainly consistent with what I think the market's discounting here, which is, this fall, this contraction in Q2 is going to be steep, but most people feel like the contraction will be relatively short-lived. And I think that's kind of what the market's been discounting these days. And the question, of course, will be, is that what really plays out? Or is this going to be a little bit bouncing along the bottom for longer than maybe people think?
Well, I'm sorry. I find myself when people start saying U-shaped, what does the U look like? What font are we talking about? How deep is that? I mean, I say this sort of tongue in cheek, but in all honesty, how long are we on that bottom for, right? And then do we get that rebound that goes all the way up, or do we just kind of blip back up to where we were, to half of where we were?
Yeah, exactly. I think most expectations here are that it would probably going to be bouncing along the bottom a little bit longer than perhaps initially thought, but certainly a rebound nonetheless in 2020. Right now, let's head down to Washington, D.C. for world and national headlines with Nathan Hager. Nathan, what do you have for us?
Well, Paul, this red headline just crossed the Bloomberg terminal. The House is canceling plans to return to work next week, citing the coronavirus pandemic. Of course, Congress had been planning to begin debate over another round of stimulus, but again, the House says it will not return to Washington next week. Right now, President Trump is meeting with Florida Governor Ron DeSantis at the White House. Two leaders plan to hold a news conference later this hour that you'll hear live on Bloomberg Radio. It comes a day after the White House issued new guidelines to help states expand coronavirus testing as several of them take steps to reopen their economies. White House Response Coordinator Dr. Deborah Birx tells Fox News how the U.S. responds this fall will depend on how the virus acts this summer.
Normally, northern hemisphere respiratory diseases move into the southern hemisphere during the summer because it's their fall. It will be very interesting to watch Australia, New Zealand, Southern Africa, and Chile and Argentina to see what happens with the virus in the summertime and what's happening to the virus here.
Turkey says 35 civilians have been killed in a bomb attack in northern Syria. State-run Anadolu news agency reports a fuel tanker went off on a crowded street in Afrin. That's a town controlled by Turkish-backed opposition fighters. Security officials, who asked not to be named, told that news agency they think Syrian Kurds, who are linked to militants who've been fighting Turkey and Syria, are behind this bomb attack. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
You've always relied on Bloomberg's strong Asian presence.
You didn't mention any particular areas in China. Let me just go to Hong Kong.
And now you need it even more.
Where are we in terms of understanding President Xi?
Bloomberg Daybreak Asia.
We're starting to see infections in some of the Asian countries.
Tonight at 6 Eastern.
Do you ever get the feeling some people just weren't prepared?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at Bloomberg.com/professional.
Imagine being fired because of who you love. Imagine being denied medical treatment because of who you marry. Imagine being evicted because of who you are. Millions of Americans don't have to imagine this. They have to live it. Because in 31 states, it's legal to discriminate against LGBT people. Get the facts at beyondido.org. Brought to you by the Gill Foundation and the Ad Council.
Are you interested in a challenging and exciting...
Coming soon, Ricochet, the new action film written by, directed, and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £28 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
This is a message from the government to all essential workers. You're doing vital jobs to keep our country going. And you can now get tested for coronavirus. From health professionals to emergency services. From delivery drivers to grocery workers. From teachers to care workers. Tests are available for you and anyone in your household who has symptoms. For a full list of all essential workers eligible and how to get a test, go to gov.uk/test. /coronavirus.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor of a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn. Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is, we've been waiting a long time for this. We actually, in terms of active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one, not only.
Catch these and more MLB podcasts right here on TuneIn. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn.
It's 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
A slide in the biggest U.S. tech shares has sent U.S. equity gauges lower as consumer confidence crashed and more companies withdrew earnings guidance. The dollar is weaker. We check those numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is now down 0.25%, down 7. The Dow's down less than 0.1%, down 17, and the NASDAQ is down over 1%, down 93. The 10-year is up 11.30 seconds, the yield 0.62%. West Texas Intermediate crude is now down 9% at 11.64 a barrel, with COMEX gold down over 0.5% at 17.1440 an ounce. The dollar yen 106.88. The euro $1.835, and the British pound $1.2439. Back to consumer confidence, it nosedived for the month of April to the lowest level since 2014. As concern mounts about jobs and incomes in the wake of government efforts to mitigate the pandemic, Conference Board's index plummeted by 31.9 points. That's the sharpest drop since 1973. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We are awaiting comments from President Trump. He met today with Florida Governor Ron DeSantis at the bottom of the hour, expected to get some of those comments. Also, Governor Andrew Cuomo, governor of the state of New York, also scheduled to speak at the bottom of the hour. So we will bring that to you as well. But in the meantime, let's talk industrial earnings. We had 3M, we had Caterpillar out today. Lots of uncertainty in the second quarter, lots of uncertainty to the point of withdrawing guidance, as we've seen from a lot of other companies, from some of these industrial companies as well. When we want to talk industrial companies, we talk to Karen Ubelhart. She's covered this space for decades. She's with Bloomberg Intelligence. Karen, thanks so much for joining us. So 3M and Caterpillar, take whatever you want, the highlights you think we need to know.
I'd say, number one, the breadth of the declines. Everybody knew things were going to be down and down double digits, but Cat, every region, every segment. 3M did a little better because of the diversity. So it's really the swiftness of the drop that is the issue. Second thing is costs are doing pretty well. The decremental margins were not bad at Caterpillar, given 22% sales declines. They really didn't do that badly on costs because A, they have been taking out structural costs for years, and B, they did move fast. On 3M, they have a diversity that actually helps them, and I am a fan of multis if they're well run, although they're out of favor at the moment. And they also saw declines, and they're going to expect double-digit declines in April, but not as significant as, of course, the deep cyclicals. I'd say the other point is everybody was talking about 3M's PPE impact, all the respirators. It's less than 1% of sales. It certainly helped, but it wasn't a big deal. And yes, they're all eliminating guidance. Go ahead. No, go ahead. I'm sorry.
Well, no. I'm wondering. I was reading a story the other day about how executives never like to waste a good crisis, and that basically it's a fantastic opportunity to accelerate moves that they would already be doing or find it prudent to do under the cover of it's a crisis. And there's no place that actually is more relevant than in the industrial space, where there's been an incredible transformation, whether it's downsizing and shrinking and becoming more focused or other moves. What do you glean from the earnings so far in terms of ways that they are reshaping in the wake of this that they may have done anyway?
Yeah, in the case of the two we're talking about today, Cat and 3M, they both have long-term structural programs going on, and they have, Cat used the example, their SG&A and their R&D and sort of their non-manufacturing costs were flat from 2016 to 2019, while revenues were up 40%. So, they have already been taking big chunks of cost and people, et cetera, out of their businesses, but certainly they're going to accelerate that. They're going to call it more restructuring, but I'm sure they're going to try to hold on to as much of the cost reduction as they can. The other big change that's going to happen, of course, is supply chain is going to change a lot, because boy, did we learn how long supply chains from abroad are not good. And so you're going to see a lot more. 3M does a lot of local for local, so does Caterpillar, but around the margin there's going to be changes in that as well. So I think it's going to be a continuation, and they're going to try to hold on as much of the cyclical restructuring that they're doing as they can. So that's I would agree with you there.
So, Karen, I know a lot of these companies, these industrial companies, have been pulling their guidance like a lot of other sectors as well. But did the management give you a sense of kind of what their playbook is? Are they thinking that this economic contraction that is occurring in the second quarter is going to be lower for longer, or do they expect this economy, once we start to open up, to reaccelerate in the second half of the year?
I think the general theme so far is lower for longer. Second quarter is going to be terrible. Third quarter is not going to be great either. And, a lot of these guys still have significant U.S. exposure, where it's been a roll down of the shutdowns, and it's probably going to be a roll back up. Both Caterpillar and 3M did mention the snapback in China, but that's a managed economy. So they shut it down quickly, and they're spending money, on stimulation and of the economy and getting people back to work quickly as well. So I would not, and in fact, that question came up in the 3M call. Could we use that as a playbook? China's different. Europe is snapping back a little bit. U.S. is going to roll out slowly is the general sense. So 2020 is going to definitely be a tough year. I will say one thing on China. 3M is the economy with the diversity of their product lines. They said across the board snapback. It isn't just, one or two segments. So that economy is starting to roll back up.
That's interesting. And just real quick here, Karen, do we have a sense of whether the pace of the snapback is, I hate saying this, I actually am feeling a visceral response, V-shaped, or is it a slower kind of bounce back?
Or a W or a U?
Or a swoosh.
Right. China feels like a V, U.S. probably pretty slow rollout, and I don't think you're going to see good numbers till 2021, because, there are, we're fighting over how fast we're going to come back. And and really the companies are really saying we're going month by month. We don't know. And April we know is going to be down 15% in the multis and 25% in the cyclicals, but we don't really know. And 3M, who never gives monthly orders, are giving monthly orders right now until we know what the heck's going on. Emerson is also doing it. So they don't know, but they're going to try to give us as much as they can along the way.
They don't know seems to be the theme of this earnings season. Karen Ubelhart, thank you so much for being with us, Senior Industrials Analyst for Bloomberg Intelligence. And, honestly, John Farrow's raised this point a number of times. How can any company actually give guidance at this point, given the fact that people have a real lack of clarity around what's going to happen, but the fact that they're giving monthly order numbers just to say, hey, we'll give you the data as quickly as we get it.
Yeah, exactly. And the question is, what will this do to forward guidance going forward? Will companies give less of it, maybe?
Maybe, indeed. Coming up, we're going to take a closer look at the pharmaceutical industry. I'm Lisa Abramowitz with Paul Sweeney. This is Bloomberg.
This is a Bloomberg Money Minute. A pullback in stocks as tech shares slide. Right now, the S&P is edging lower. Consumer confidence dropped in April to the lowest since 2014. Concern is mounting about jobs and income all across the United States. Oil lower today at $12 a barrel. Crude's 80% plunge since the start of the year has come as the coronavirus destroys demand. Pepsi's quarterly revenue beat estimates. However, uncertainties surrounding the pandemic caused it to withdraw its full-year forecast. Frito-Lay and Quaker Foods both saw a 7% gain in organic sales, while North American beverages rose 6%. And the pandemic is causing Americans to worry more about their finances than health. That's according to MetLife. Money was the top concern for 52% of workers, compared with 44% who were most anxious about physical and mental health. About 29% of workers are earning less as a result of the pandemic, and 74% said their job status has been affected. Courtney Donahoe, Bloomberg Radio.
Hi, we're the Goo Goo Dolls. We're fortunate that our daughters have what they need to grow and learn. But that isn't the case for nearly 13 million kids in the U.S. that struggle with hunger.
Childhood hunger is a heartbreaking reality that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and provides it to families and children in need.
You can help kids in need in your community by visiting feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
If knowledge is power, the Bloomberg...
Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries, just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
Please be wary of text messages containing links. They may appear to be from legitimate senders like the government, a bank or a delivery company, but never enter your online banking information or personal details after clicking on a link.
For more advice on keeping your money safe, visit santander.co.uk.
This is a message from the government to all essential workers. You're doing vital jobs to keep our country going, and you can now get tested for coronavirus. From health professionals to emergency services, from delivery drivers to grocery workers, from teachers to care workers. Tests are available for you and anyone in your household who has symptoms. For a full list of all essential workers eligible and how to get a test, go to gov.uk/coronavirus.
Max is dreaming of riding a giant chameleon whilst fighting a clan of ninjas. But in reality, he's helping fight COVID-19 in his sleep. Like thousands of others, he's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
You go, Max. Search Vodafone Dream Lab and join the Dream Team tonight.
Dreamlab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we are awaiting comments from President Trump as he met with Governor of Florida, Ron DeSantis. We're also awaiting comments from New York Governor Andrew Cuomo. We will bring those to you when we get them. Plus, we're also going to take a look at some earnings coming out of big pharma, some pretty decent numbers coming out of the pharma sector. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Paul, stocks are fluctuating after a strong open. The S&P actually slumped. The NASDAQ fell more than 1% at one point as data showed U.S. consumer confidence dropped in April to the lowest since 2014. Apple, Facebook, and Netflix are all lower on the day. We look at the numbers every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P is now little changed, up nearly 2. The Dow's up 0.3%, up 68, and the NASDAQ is down 0.7%, down 58. The 10-year is up 12.30 seconds. The yield is 0.62%. West Texas Intermediate crude is now down 5.4% at $12.09 a barrel, while COMEX gold's down 0.5% at $17.15.90 an ounce. The dollar yen is currently at 106.89. The euro's $1.833, and the British pound $1.2435. The U.S. Oil Fund recorded a net loss of $1.9 billion in March, according to a regulatory filing. This includes $466 million in realized trading losses on futures and another $725 million on unrealized loss on market value of fixtures. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Waiting comments from a number of leaders, including President Trump and Andrew Cuomo, governor of New York. Right now, let's take a look at the pharmaceutical industry after we did get some results from Merck and Pfizer. And before we dig into those, we are going to be joined by Max Neeson, biotech, pharma, and healthcare columnist for Bloomberg Opinion. And I never want to miss up a chance to ask Max about vaccine development, where we are in terms of that, and how well international pharmaceutical companies as well as scientists are cooperating to move as quickly as possible to make this happen.
So it does seem like there is a broad movement towards cooperation. Companies sharing science, beginning to focus on the issue of manufacturing at scale, which is the thing you have to worry about once you actually have an effective vaccine. There was a report this week from an organization called CEPI that's working to do some of that coordination and advance candidates. That they hope there may be a vaccine available for sort of limited emergency use by the end of this year. But again, that would be in very small quantities and only if everything goes very, very right. So still looking probably at sometime next year or later for sort of the broadly available vaccine that it would take to really get life back to normal.
So Merck did report earnings today, and they weighed in on the potential for a vaccine. What did they have to say?
So Merck is a company that has been a little bit later to sort of join the fray. They are actually the one company of the major pharmaceutical groups that's actually successfully developed a vaccine in a response to the pandemic. So anything that they end up doing is worth responding, or at least worth watching very closely, though they will be, at least to some extent, behind some of the other efforts that started sooner. Of course, hopeful that past experience will lead them to a faster and more effective result at some point.
So, Max, so that's the update on the vaccine. How about testing? That's the more immediate issue here. Testing equipment, testing laboratories. Where are we on that?
So there has been some genuine improvement in the last week or so in terms of the testing rate. And we just got a plan from the Trump administration that should hopefully bring a little bit more federal attention, funding, and coordination to the issue. Their goal, the Trump administration's goal, is somewhat short of what some experts have called for, which is a really dramatic increase in testing, such that people could be tested multiple times a month. Those on the front lines, things like that. It'll take some time to get to the point where we have really robust diagnostic testing, let alone that sort of broader surveillance and antibody testing, but definite progress, and this effort by the Trump administration should help to some extent.
I remember a long time ago, about, 3 months ago, when other diseases and other medicines were in the forefront of people's minds, in particular with cancer and the development there. And I'm wondering, Pfizer in particular has been particularly on the front lines with new drugs to combat cancer. We got their earnings. Let's talk about some of the other things that we're learning aside from the coronavirus, because life does go on in other ways too.
Sure. So the two main things I would point to from Pfizer, Merck, Novartis also reported today, the impact that you see in terms of their business comes in sort of two waves. The first is that they are seeing some reduced sales for drugs like cancer drugs that are administered in hospital settings, as people have a harder time doing that safely. Now, certain things you can't avoid, and so they're doing all right. But Merck, for example, did cut its expected sales because it has a high proportion of those kind of drugs. In terms of the long run, there may be a slowdown in various drug development efforts, because it's, as you might imagine, really hard to run a cancer drug trial right now. Thinking about getting a lot of immunocompromised people to one place, and often to traditional clinical trial sites, which are at hospitals, at infusion suites that are being used for other things right now. So it's both kind of a short-term financial impact and a long-term disruption of research. It'll be some time before we find the real extent of both of those. Companies are still being pretty cautious about making really forward-looking projections, given the sort of early stage of the epidemic and the recovery from it.
Max, you cover all things healthcare. How come there's not a Manhattan Project equivalent for treatments and vaccines for this virus?
So, to a certain extent, there is a lot of public funding being directed through organizations like CEPI, through BARDA, towards supporting organizations that are working on these treatments. I think very much so, more has to be done in terms of, doing surge funding, coordinating efforts, making sure that the best candidates get as much funding as they could possibly need. And then the most expensive problem, the one that really needs that Manhattan Project effort, something that I know Bill Gates is devoting some attention and resources to, is when you have a viable vaccine, how do you rapidly deploy it, produce it at a global scale? That's something that really hasn't been done before, and is going to require an enormous amount of spending, and wasteful spending, in that if you wait for concrete proof that this is the best possible vaccine, the one that works, to even start building manufacturing, it won't even be ready nearly in time. So you're going to have to build some manufacturing that you'll never end up using, considering that a lot of these vaccines use different and novel technologies. So that's the thing where I think you can you should have a dramatic increase in funding and attention, because that is a difficult, huge, and thorny problem that will need to be solved in the next year or two.
We're speaking with Max Neeson, biotech, pharma, and healthcare columnist for Bloomberg Opinion. And Max, since we have you and since we have some time, I want to take this conversation a step further, not just as far as where we put money to develop the vaccine and how to do it quickly, but the entire ecosystem of creating vaccines and these crucial medicines. And I'm struck by a Joseph Stiglitz column in Project Syndicate, Nobel Prize winner, economist at Columbia University, where he was saying that the entire structure of drug creation is flawed and really goes against creating some of these crucial medicines. Can you speak a little bit to that and how maybe there'll be a rethink of the incentives around creating new medicines that could potentially be beneficial going forward?
Oh, absolutely. This is a real hobby horse of mine.
I know it is.
He's absolutely right. The medicines that we incentivize are the ones that are the most profitable, and often specifically the ones that are most profitable in the United States. Now, what that often means is a lot of money goes towards rare disease drugs, towards cancer drugs that are really expensive and don't get a lot of reimbursement pressure because there aren't that many people that get any given cancer disease. What that leaves behind are vaccines, and especially vaccines for infectious diseases, which, by their very nature, they often arise in less developed countries. They arise at moments of great public health need where there's not a lot of tolerance for high pricing. And then when you point to another potential source of future pandemics, antibiotic-resistant bacteria, the incentive, if you actually develop a good medicine for those, is to use it as little as possible. So, the pricing, the things that we tend to value and pay money for are not the ones that we want to most incentivize. I very much hope that we can begin to build different incentives. So there's not just an incentive to kind of jump in when there's a crisis, but to develop the sort of long-term pipelines of technology that will help when the next crisis runs around, us to be more prepared at a global level.
So, Max, I know you talk to lots of different people within the healthcare space, scientists and doctors and so on. I guess one thing to me as a lay person here, this is a virus. It's similar to other coronaviruses, maybe even the common cold, maybe the flu. It doesn't appear from that perspective that we have to literally start from ground zero and have these biotech companies, these pharma companies saying they just, it's going to take a lot of time like any other new drug. Again, am I reading that wrong? Is this so different that most of these scientists really are starting from ground zero?
So, this is actually kind of getting back to incentives. The closest cousin that we know about to this coronavirus is SARS. And there were nascent efforts to develop a vaccine. But since that outbreak petered out, there was no financial motivation to keep developing it. And because we don't have well-developed incentive structures or long-term financing structures for developing vaccines that don't have a profitable economic future, those vaccines stopped getting developed. So we didn't make a lot of the discoveries about coronaviruses that might help this time around. There are some vaccines for animal coronaviruses, but none of them are especially effective. It just all comes down to the fact that making vaccines is incredibly difficult, and making a vaccine for a comparatively new and poorly understood virus, even though it's related to ones we know, it still does take a lot of work from scratch to develop a long-lasting and robust immune response. That's just a fundamentally difficult scientific problem, and one that, while there have been, real recent advances, there's still a lot that we're learning on the fly. The most advanced candidate, or one of, is what's called an mRNA vaccine. The nice part about it is that it's very adaptable. It's something that can be produced quickly in response to a new pathogen. But we don't know, and what we're going to kind of have to find out on the fly, is whether it's safe, reliable, and effective, and beyond that, able to be produced on a mass scale. So it really is, unfortunately, a lot of work that does have to be done from scratch, both due to, bad incentives, underinvestment, and sometimes the wrong priorities in where we spend money.
In the meantime, there's another kind of immunity, herd immunity, that can be created by people getting the virus. Potentially, we don't know, and not being able to get it. Maybe again, we aren't sure. WHO has put something out saying that there's no evidence showing that you do get immunity to the virus once you already have it and develop the antibodies. But there is a question of how much of the population in the hardest hit area in the United States, how much of the population has been exposed? And there have been studies. Is this right that about 25% of the population has already been exposed, Max?
So that's one study. And then fundamentally, that's an extrapolation from a limited sample size based on a test of unknown specificity.
How do you really feel about this?
Yeah. So I wouldn't be surprised if the final answer, once we have more data from a series of reliable tests, isn't too far off from there, but it may be that it is substantially less than that once we get a sample size that better represents the broader population and a more reliable test. And then on the question of herd immunity, that's one where we don't just need to, this one round of testing. We need to do that test and then follow people for months in order to get a sense of whether reinfection is possible and who might be vulnerable. Those common coronaviruses, those seasonal ones we mentioned before, people lose immunity inside a year. That's why they come back seasonally. If that's the case for this virus, then if we reopen it cautiously, if we aren't vigilant, we may see, really robust seasonal reoccurrence. And that's something that we really need to understand, and that should inform the sort of ongoing response for not just, the next few months, but for years ahead.
Max Neeson, thank you so much for taking all this time with us. Max Neeson, biotech, pharma, and healthcare columnist with Bloomberg Opinion, joining us on the phone from New York. Right now, let's get a check of what's going on in the market. Greg Jarrett has that for us, the Bloomberg Business Flash. Greg.
We started out on an optimistic note, Lisa, but that evaporated as we experienced a slide in the biggest U.S. tech shares that weighed on major equity gauges. And consumer confidence also crashed, and more companies withdrew earnings guidance. The dollar is weaker. Why don't we check the numbers as we do every 15 minutes throughout the trading day? The S&P 500 is now up just less than 0.1%, up 2. The Dow is up 0.3%, up 70, and the Nasdaq is down 0.6%, down 55. The 10-year is up 13.30 with a yield of 0.61%. West Texas Intermediate crude oil is down 5.8% at $12.06 per barrel. COMEX gold is a little changed at $17.24 even per ounce. The dollar yen stands at 106.83. The euro is $1.845. The British pound, the dollar 24.46. Couple of stocks. Netflix is down 3.5%. Facebook is down over 1%, and Twitter is down 3.4%. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We are still awaiting comments from President Trump as he met today with Florida Governor Ron DeSantis. When we get that, we will bring that to you. But first, let's take a look at emerging markets here. We've seen the broader U.S. equity markets retrace approximately half of the initial decline of about 33% that we saw as this coronavirus really took effect on the market. The question is it time to dip the toes back into emerging markets, get out on the risk curve here? When we talk EM, there's nobody better than Damien Sassower. He's our emerging market strategist for Bloomberg Intelligence. So, Damien, thanks so much for joining us again. Give us the kind of the lay of the land of when you talk to your institutional investor clients. How are they viewing EM right here as they look at some other asset classes, really start to claw back some of those initial declines?
Yeah, Paul, most of the people I speak to are approaching EM on a risk-averse basis, on a risk-neutral basis. So they're not really taking, let's go all in, let's buy it all. They're really kind of taking it as it comes, as it were. And they're basically looking, for the most part, to access local currency debt markets on a FX-hedged basis. Simply put, central banks are showing a greater priority in domestic aid. So that means they're injecting liquidity quantitatively as opposed to rate cuts, right? Because that has a greater impact in the near term, right? I mean, that's more money in the hand as opposed to waiting down the road. But what that's doing is it's generating, it's building weakness across the EMFX asset class, and I think that's going to materialize and continue for the foreseeable future, Paul.
I'm just wondering, I've read a number of articles on the bifurcation that's happening right now in emerging markets between the haves and the have-nots, the investment grade emerging market sovereign complex versus everyone else. Can you talk a little bit about that?
Absolutely, and that's exactly right. I mean, that's what's benefiting Asia. I mean, look, the removal of Asia term premia is kind of unbelievable. I mean, we're seeing flattening of Asian curves pretty relentlessly, whereas if you look at most of those high beta emerging market economies you're speaking of, I'm talking Brazil, Russia, Mexico, South Africa, the higher risk ones, their curves are still relatively steep, and they may steepen yet further. So, yeah, you are definitely seeing that kind of move from, I guess, the U.S. Into the emerging markets.
Damien, we were just talking to Count Ubehard of Bloomberg Intelligence, talking about some of those big industrial companies, and they were seeing, their anecdotal evidence about China was a really pretty solid snapback in the Chinese economy. What are you hearing about that from the EM perspective?
Yeah, I mean, China's definitely getting back to work, but I mean, there's no denying the fact that dollar dominance in China's own backyard is really alarming. I mean, and what I mean by that is this: there is still a relentless demand for dollars inside of China by domestic institutions and households. And so basically what you're seeing is the forward strip, which had shifted into negative territory as the Fed moved to the zero lower bound, now going positive again and steeping upward. So, yeah, I mean, that makes sense, right? There should be a premium you pay for dollars abroad, but it's building, and it's continuing to build. And, Paul, that is a risk, right? Because for me, if these companies who are snapping back, can't basically find the funding to continue manufacturing whatever it is they're manufacturing or assembling, whatever it is they're assembling, you're going to see some real difficulty domestically there.
I'm wondering, as we talk about emerging markets, I'm struck by the oil complex, and you've been talking a lot about the destruction in oil prices and how that factors into the Nigerias of the world and other oil exporters, Venezuela, which is beset with its own issues, Brazil certainly. And I'm wondering how much of a divergence are you seeing within asset prices that reflect the potential carnage from oil prices?
Well, Lisa, this is really a case of the haves versus the have-nots, right? Because if you just look at the Gulf, the Mideast issuers, look, Gulf sovereign wealth funds have assets of more than $2 trillion as a cushion for when oil revenues drop, right? And we've seen Mideast issuers take advantage of these low yields by raising a boatload of dollar debt in the market this year. So, we expect over $100 billion in bonds issued by Mideast issuers over the course of 2020. That's going to be more than last year's record. I guess the way I'm looking at this is, hey, if you really dig down into it and you look at the fundamentals, they can continue along with asset sales. I mean, ADNOC, the Abu Dhabi National Oil Company, just basically, its gas pipeline unit is $15 billion. It might be on for sale. So there's a lot of things going on in the Middle East if they need to raise assets and stem the bleeding here during the funding squeeze.
So, Damien, I'm looking at the DXY index, the dollar spot index, sitting right near or just below 100. Is there a bear case in my lifetime for the U.S. dollar?
Well, DXY is different than BBDXY. We talk about that all the time. BBDXY is a more kind of holistic measure of,
By the way, whoa. We talk about this all the time, like another conversation about DXY versus BBD. Carry on.
Okay, so if your listeners know what I'm talking about, BBDXY is a much broader measure. It includes a lot more currencies, including those in emerging markets, right? So, to your point, Paul, it's really difficult for me to create a bearish scenario for the U.S. dollar in the current environment, outside of the fact that inflation, if it does go up and people start to focus on the fundamentals and the exorbitant amount of debt that the U.S. is going to be basically taking on, yeah, you can make a fundamental case that perhaps the dollar should decline off the back of that, but it's that much worse for emerging markets. They're taking on more debt. They're monetizing their asset bases, So, it's really magnified abroad, and for me, the dollar's the best of the worst, so I agree with you. It's really hard for me to get bullish on most of the high beta EM currencies, with the exception of Asia. We are seeing some pockets of strength in Asia, and it is kind of behaving relatively well amid the carnage.
Damien, one question that I have is the incredible outflows out of emerging markets. I've seen these asset flows that are way beyond anything we saw in 2008, and they've only continued, which surprises me. There's been a little bit of money that's come back into certain pockets, but on a whole, there continues to be these withdrawals. And I'm just wondering, longer term, does that speak to a bear case that perhaps isn't yet even baked in to prices?
Well, I mean, a bear case from the perspective of a U.S. dollar creditor looking to invest abroad, for sure. I mean, because what you're talking about is flat-out currency weakness, right? I mean, so, but domestically, I mean, for me, what it means is that perhaps a lot of these countries can take hold of their futures again. You know, a lot of them have huge external debt levels. They've got a lot of debt that they need to make whole on, and moving that onshore and taking better control of that might be a good thing in the short term.
Can you explain how that happens? Because that just screams default to me.
No, I mean, it depends on which countries we're talking about. Certainly along the periphery and the frontier of emerging markets, you know, the really weak hands, I'm talking, you know, the Dominican Republics, the Costa Ricas, the Nigerias, the Angolas of the world, they rely on dollar funding to survive. But a lot of the majors do not. But nevertheless, the majors have taken advantage of very low yields and low rates offshore in places like the U.S. to borrow. And, you know, they've taken on a lot of borrowings in dollars. So when the dollar rises relative to their currencies, their debt loads become that much more difficult to pay back. If they can reposition and rework a lot of that dollar debt back on shore, that's not necessarily all bad for many of these markets, Lisa.
Thank you so much. We really appreciate it. As always, smart on emerging markets and everything else, frankly. Damian Sassower covering emerging markets credit for Bloomberg Intelligence, and frankly, everything. Honestly, this has been an ongoing question, the underperformance of emerging markets for just years, and the carnage that we've seen, the withdrawals, the charts, they're just shocking how much more money has flown out of emerging markets. I think more than $100 billion since the start of this crisis.
Exactly. I just think, you know, given all the uncertainty we have here, exacerbated even by the oil situation here, it's just, you have to have just... it's not for the faint of heart. Let's put it that way, because some of the themes that were underlying emerging markets, whether it's globalization or just rising, middle class in China, and all those things have really just been, I think, given a significant and fundamental jolt to the point where I think investors are really thinking some of the underlying tenets there of emerging markets. But like any market, there's value there, and there's value to be found and value to be created. But boy, it's certainly, again, not for the faint of heart.
In markets now, we're seeing the NASDAQ down 0.8%, the S&P down 0.1%, the Dow actually eking out 0.1% gain. Interestingly, and Dave Wilson didn't talk about this too much, but I thought it was interesting that yesterday, the Russell 2000 small caps actually delivered almost twice the performance of the S&P. They were up more than 3%, and we're seeing an ongoing strength in the Russell 2000 today, up more than 1%. Yesterday, it rose almost 4%. Just to give a sense, some people gleaning some optimism that the smaller companies seem to be doing just a touch better. I'm Lisa Abramowitz, along with Paul Sweeney, and this is Bloomberg.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local listings. Interconnect here.
Let's start with the...
Right now at the Halifax, wherever we're working from, we're all working together to be there for you.
So our customers can apply for a payment holiday on mortgages, loans or credit cards.
And because we want you to stay home and stay safe,
we've created step-by-step guides to help you set up online and mobile banking,
which is safer and easier than you may think.
But for those that really need to see us in person, we're keeping as many branches open as possible.
So however you need us at the Halifax,
we're here to help.
Terms and conditions apply. For more information, go to halifax.co.uk.
Hit the court anytime with these great NBA podcasts on TuneIn. Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I went to high school here in New York
Find these and more NBA podcasts right here on TuneIn.
Want to relive the glory of college football?
Pulls over a man into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
Pass to the 5! Touchdown! Search classic game replays to listen for free.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen.
Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From New York to our Bloomberg TV and radio audiences worldwide, this is Balance of Power, where the world of politics meets the world of business. I'm David Weston. As we come to air, we're waiting for a tape playback of remarks from President Trump and Ron DeSantis, the governor of Florida. They've been talking about restarting the economy, specifically in Florida. We'll bring you that as soon as it happens. But in the meantime, let's check in on the markets, because they've been really all over the place today. And for that, we turn to Abigail Doolittle. Really, it's been very volatile today.
It certainly has. We've had stocks all over the map. At the open, we actually had the S&P 500 up about 1.5%. At the lows, down about 0.6%. Right now, down fractionally. And as you can see, taking a look at the NASDAQ, the FANG index, and then Alphabet, the weakness really coming from big tech. And what makes this so interesting, David, of course, is the fact that Alphabet is the first of the big FANGs. Netflix did, of course, report, but Alphabet, among Alphabet, Amazon, Apple, and Facebook reporting. And it seems as though investors are a little bit jittery. Now, interesting, Alphabet's actually lower on the year, but the FANG index over the last month, even a little bit longer, really leading this rally up more than 20% off the lows. So investors seem to be pulling back just a little bit. They want the proof that that's justified, David.
Yeah, Abigail, as you say, it's a big week for tech. At the same time, it's every week is a big week for oil, it seems like. That's been a little bit all over the place as well. And I know you're looking at that specifically because the contrast between commodities on the one hand and equities on the other.
Yeah, well, it's really interesting because oil is all over the map, and that's been the case for quite some time. And we, of course, have been talking about the idea, the tale of two economies, stocks pointing to some sort of recovery, oil's crude, the crude crash pointing to something less constructive. But we keep hearing about the difference in contracts. So when we take a look at the contracts, the June contract down 6.5% at about $12 per barrel. The latest news on this, S&P Global rolling out of that June into July. So July is significantly higher. It's down on the day, but significantly higher at $18 a barrel. August and September, just moments ago, had been higher. Now slightly lower on the day, but when we look at August, it is $21 a barrel, and September, $24 a barrel. So that tells you that crude oil futures believe that the price of crude as time goes on should be higher, perhaps suggesting that the storage issue that we've had more recently, the demand destruction, could fade just a bit, possibly catch up with the more optimistic view of stocks. Although, as we've been talking about this tale of two economies, the truth probably lies in the middle. Maybe stocks overall will give back some, and oil will hopefully do what its future contracts suggest, at least right now, David.
Okay, thank you so much to Abigail Doolittle for that report on the markets. In the meantime, as I say, we're waiting for some remarks from President Trump and Ron DeSantis, the governor of Florida, from their discussions at the White House. And we want to go to Kevin Cirilli, who is there with a report. Kevin?
David, if you can hear me, I'm hearing a major connection issue right now.
Okay, in the meantime, we're having some technical difficulties. Earlier today, Dr. Anthony Fauci of the NIH spoke with our David Rubenstein. Everybody's listening to Dr. Fauci. We should too. This is what he said.
That I think people are going to look at when this is all over. I mean, right away they had said that this was a virus that jumps species in an animal market, and it only goes from animal to human, and there's no evidence whatsoever that it's transmissible from human to human, and if so, very inefficiently. As they were saying that, weeks before, it was clear that there was human-to-human transmissibility in China now when we look at it retrospectively. So not only was it bad for the rest of the world, but they hurt themselves, because what they did is soon after the realization that there was this new infection, and to their credit, they put the sequence up on a public website very quickly. But what they also did is, by not letting their own health authorities know that there was transmission from person to person, they held something like a 40,000 person block party in Wuhan, which is the worst possible thing you could do, is to have congregation of people when you have a virus circulating that has a high degree of transmissibility.
So, Dr. Fauci, to date, about 55 to 56,000 Americans have died from this. What is the latest in your projections of what the likely death toll will be based on all the modeling that you are now looking at?
Well, David, as I've often said, although models are helpful, they're only as good as the assumptions that you put into the model. And often you can be misled as often as you can be helped. So right now, we're at 55,000. The model now has been upgraded to say, instead of 60,000, it's probably going to be 70,000+. Again, that's an assumption. And the assumption is based on how you respond. And here's what's going to determine how many deaths we have. As we try, and hopefully everyone does it according to the guidelines for opening America again, which were very carefully designed, of which I played a role in making them very conservative and very careful. If, as we open up the country economically and otherwise, if we have the capability to implement well when new cases occur, which they will, there's no doubt that they will, as you try and relax mitigation, if we have the capability of identifying, isolating, and contact tracing in a highly effective and efficient way, then the numbers will stay low. It may be 80,000, whatever, 70,000, like the model says. If we are unsuccessful or prematurely try to open up, and we have additional outbreaks that are out of control, it could be much more than that. It could be a rebound to get us right back in the same boat that we were in a few weeks ago. So that's why we've really got to be careful and very circumspect as we go from a lockdown to a gradual rolling re-entry into some sort of normality.
That was Dr. Anthony Fauci of the NIH talking to David Rubenstein, our colleague, but also, of course, the head of Carlyle Group. In the meantime, we're going to try once again to go back to Kevin Cirilli in Washington, because he is worth the effort, goodness knows, to talk about what's going on between the president and Ron DeSantis, the governor of Florida. Kevin, are you there? What do we know about what's happening at the White House?
Coming in loud and clear. David, here's what I can tell you. The president meeting with Florida Governor DeSantis earlier today, 3 points that I would like to highlight. The first is that the president saying that they are actually considering suspending international travel between Miami and Brazil. And also the second point, allowing for airports on international flights to do immediate types of testing as it relates to COVID-19. So obviously, as we've been reporting for several weeks now, significant changes coming to the airline industry as a result of this, and testing for flights for COVID-19, something that very much appears to be in the early stages in the short term. And then the final point is that the president has also suggested that there's been some type of action taken as it relates to Tyson's. And so we don't have the specifics of a potential executive order that the president has signed, but we'll be carefully, obviously, monitoring the president's remarks as it relates to what's happened with Tyson's and the meat and poultry industry.
So, Kevin, does the president approve of the way that Governor DeSantis is handling this? He's had some disagreements, for example, with the governor of Georgia, who he thought maybe went too far too fast. Is the governor of Florida complying with his guidelines?
You know, I was struck by this, David, because if you think back to several weeks ago, Governor DeSantis received criticism by many individuals in terms of perhaps not acting as swiftly as other states had hoped. The president alluding to that, and you'll hear this in the tape playback, where he says at one point, you know, people thought that Florida was going to be another northern Italy, and that just hasn't turned out to be the case. So the president defending Governor DeSantis, defending Florida, and of course, you know, Florida, when you talk about Florida in a presidential year, you have to note its political importance. So there appears to be still a strong political alliance between President Trump and Governor DeSantis.
Okay, Kevin Cerulli, thank you so much. He's our chief Washington correspondent, and we'll keep waiting for that tape playback of what President Trump has to say with Governor DeSantis. In the meantime, coming up here, we're going to talk with the man responsible in the House of Representatives for antitrust enforcement about antitrust in the time of the coronavirus. That's coming up next. This is Balance of Power on Bloomberg Television and on radio.
Market upheavals.
The narrative is driven by uncertainty about
the garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Dating can be tricky, especially when you can't meet face to face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5 and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Max is dreaming of riding a giant chameleon whilst fighting a clan of ninjas. But in reality, he's helping fight COVID-19 in his sleep. Like thousands of others, he's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
You go, Max. Search Vodafone Dream Lab and join the Dream Team tonight.
DreamLab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
America, Your children have an amazing superpower. That's right. They can help save lives by simply washing their hands. Just 20 seconds of thorough hand washing after they've coughed or sneezed or been outside can help fight against the dastardly spread of germs. Armed with only soap and water and hands, your superhero can protect you, your family, and everyone out there in America land. Amazing! Find out more at coronavirus.gov. A message from the CDC and the Ad Council.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hey, it's Jacoby here from Jalen and Jacoby, and after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air, and they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today.
Did you know with TuneIn's local radio feature, you can stream live FM and AM stations in smooth streaming quality and discover local news, talk, and music stations you didn't even know existed. Navigate to the local radio section under Browse to listen locally on TuneIn.
This week on the New Yorker Radio Hour, our writers fan out to report from across the city at the height of the coronavirus outbreak in New York.
I won't say it's business as usual, but, we still have responsibilities and we are handling everything. But, I'm not going to let COVID beat me.
That's the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
Not this kind of market concentration that occurs as a result of this pandemic. And, the investors are already advising clients that there are great opportunities out there. In fact, describing it as, unique opportunities to invest during this pandemic. And I just think we shouldn't allow that to occur. It's not good for the economy. It's not good long term. And those agencies should be focused on a number of other responsibilities right now.
So, Congressman Cicilline, I saw that Senator Warren proposed legislation today, introduced a bill. Are you signed on to that bill, or do you have a somewhat different approach?
Well, what I'm doing is I'm circulating a letter in the House in the hopes that we will include a moratorium in the CARES 2 package. We're currently working on the fifth relief package to respond to the pandemic. That's the vehicle which I think we're most likely to see some moratorium action because it is a legislation which will have to be passed by both the House and the Senate and signed by the President. So my effort right now is to try to get language included in the CARES 2 package that will provide for this moratorium, but legislation is obviously another way to do it, and my guess is we'll have a bill in the House as well at some point.
Congressman Cicilline, as you know very, very well, the reason we have antitrust laws, the Sherman Act was created because there are certain adverse effects of too much concentration, companies getting too big a market share, too big a position in the market. At the same time, there are some advantages from mergers and acquisitions. Sometimes you can keep a company going that otherwise would go out of business. Are you concerned that if we suspend all mergers and acquisitions for an indefinite period of time, we might actually put more stress on some companies and lose more jobs?
No, I don't think that will be the case. In fact, companies that are truly failing would not be covered by the moratorium. What we want to ensure is that investors and those that are sort of in the business of gobbling up companies don't exploit the global pandemic as a way to further consolidate their market share. And, the agencies that would have the responsibility of reviewing these mergers and acquisitions ought to be focused on the things that are really hurting consumers right now. As I said, price gouging and hoarding and other kinds of anti-competitive behavior. And again, this is not a permanent moratorium. This is a moratorium during the life of the pandemic so that we ensure that companies are not unfairly increasing their market share and exploiting or taking advantage of a serious public health crisis. So, I look at the danger of the kind of market consolidation that we saw in the banking and airline industries and even in some of the technology sectors after the Great Recession. That kind of market concentration takes a long time to overcome, after it happens. And so making sure that we protect competition, so you protect consumer choice, you drive down costs, you protect innovation. All of those things are implicated when you have the kind of market concentration that can come from the consolidation that occurs during a public health crisis such as this.
Congressman, give us a sense of what's going on with mergers and acquisitions right now, even absent legislation. And there's a Hart-Scott-Rodino, you have to go and wait for certain size mergers anyway for clearance from either the Antitrust Division or the FTC. Are those clearances going through, or have those been suspended? Essentially, are we delaying acquisitions and mergers anyway?
Well, I think merger activity has temporarily slowed, and that's not unsurprising since, kind of much of the economy has come to a standstill. But I think many of the forecasters are forecasting an acceleration of deal making that kind of may really supercharge economic concentration in a number of industries. Equity firms are sitting on a lot of cash, $2.5 trillion of investor cash, and they're, openly speaking about the current landscape of distressed assets and that kind of unique opportunities to invest. So I think what we're trying to prevent is sort of a rush to a whole series of mergers and acquisitions that will produce very unhealthy, very anti-consumer market concentration, and not wait till it's happened, but put in a moratorium so that we can prevent it from happening.
Congressman, I'd be remiss if I didn't ask about what's going on with Rhode Island with the coronavirus. We heard about it early on. How are you doing? Is it growing there? What are the actions that are being taken by the governor or others to stop it?
Yes, our governor's doing an extraordinary job. She has really, from the very first days of this pandemic, been very clear about how serious it is and built up capacity for the surge in terms of 3 hospital sites outside the traditional hospital sector. We are essentially in a stay-at-home order, except for essential activities. People are expected to stay home unless there's some really important reason they have to leave. We have the most tests per capita of any state in the country, so we have a very good testing regime, although we continue to have problems getting tests and getting test kits like every state. But we're in the middle of 2 hotspots, in between Boston and New York, so the governor has been very aggressive in trying to protect Rhode Islanders. It's obviously having a devastating impact on our economy, particularly on small business, so we're working every day to try to make sure small businesses in Rhode Island can access the resources that Congress has provided and think about what they need in the next package to make sure that our small businesses particularly survive the engine of Rhode Island's economy. But it's very serious here, as it is, I think, in most parts of the country. One of the great challenges, all across America is we don't have blood-based testing. We appropriated $25 billion in the last emergency relief package, and a requirement that the administration develop a national testing strategy, which I think will make a difference. I think we're getting through it like every place, but it's ravaging families in our state and obviously really devastating to small businesses.
Congressman, you mentioned how important it is to try to help these small businesses. There's also a lot of concern about helping the states whose budgets have been really devastated, a lot of them, both because of increased costs and also a real slash to revenues. Give us a sense of Rhode Island, because we heard even yet again today from Secretary of Treasury Mnuchin about how we shouldn't be bailing out states that have been profligate with their pensions. I know that in Rhode Island, actually, your governor, Gina Raimondo, in her earlier job, actually took on the pension issue. Is there a way to...
This is a special report from Bloomberg Radio. It's time now for today's COVID-19 update from the governor of New York, Andrew Cuomo, on Bloomberg Radio.
In the state for many years, and he's been a great talent here. It's a pleasure to be here today. We're in Syracuse, State University of New York, upstate medical school and hospital. I had a chance to say hello to the nurses and doctors who work here, got to wave from a social distance. But I wanted to say thank you for all they've done here. He also sent a team down to New York City. So it's just been an extraordinary experience, but we've seen the good, the bad, and the ugly in all of this. And the good is beautiful. Let me talk to you about some of the facts that we're dealing with today. Facts are our friend, right? People want to make decisions. They want to know the facts without spin, without opinion. And that's what we've been giving them. Total hospital
technical difficulties with our update from Governor Andrew Cuomo today. We are going to rejoin our Balance of Power program with David Weston until and if we get a better line with Governor Cuomo, and we are waiting for President Donald Trump and the governor of Florida, so stay tuned for that. But right now, we return to our regular programming with David Weston and Balance of Power on Bloomberg Radio.
Small Business Administration is in the spotlight right now to get that money out to small businesses. That's coming up on Balance of Power on Bloomberg Television and Radio.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
To protect his home and family from disaster, Steve used courage, wisdom, and his camera phone.
That should do it.
Way to go, Steve! By simply taking digital pictures of his family's important documents, Steve can always have them stored safely online, no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
Whether it's another day of market misery, pandemic emergency, or both, one thing will still go right.
We have the latest world and national news.
Karen Moscow and Nathan Hager bring you the most accurate coverage.
The White House is looking for additional ways to support the economy.
Bloomberg Daybreak.
We continue to watch equities around the world.
Weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
You are listening to Bloomberg Radio. We return to the COVID-19 update for today from Governor Andrew Cuomo of New York.
People to address the problem. And in this situation, we can actually measure. We have data. We have facts. So measure what is happening in society and calibrate your reopening to those measurements, right? So we're adopting a set of rules, a set of guidelines. We've studied reopening plans all around the country. We've spoken to every expert on the globe who's been through this before. And we've come up with factual data points to guide us on reopening. First point, don't overwhelm the hospital system. If the hospital system in an area exceeds 70% capacity, which means you're 30%, you only have 30% left, or the rate of transmission of the virus hits 1.1, those are danger signs. We know that. Remember, hospital capacity, if you're at 70% on your hospitals, there's a 2-week lag on this virus. So if you ever hit 70%, you can expect the number to go up for the next 2 weeks as people who just got infected actually get ill, and some of them come into the hospitals. So 70% is a safe metric to use for your hospital capacity. If the transmission rate hits 1.1, that's what they call outbreak. That means it's going to spread much, much faster. You wouldn't start reopening unless you had a transmission rate below 1.1, really below 1. But if it hits 1.1, that means you're in trouble. So those are the two main data points. If you look at the state, and this state is different than most states, This state has New York City, one of the most dense urban areas on the globe, and then we have upstate New York. And if you look at our infection rate upstate New York, it's very different than the rate downstate New York. And if you look at the rate upstate New York, it's comparable to many states in the Midwest and the West. We hear the discussion every day, well, some states are reopening because they don't have that bad a problem. Some of the places in upstate have a problem that's comparable to states in the Midwest or the West. Much, much different than New York City. Okay, then let's come up with data points, factual points of what we have to do to reopen so everyone has the same opening template that we're dealing with. And we have to be smart about this. Again, I know it's emotion, and I know people are feeling emotional, but emotions can't drive a reopening process, right? We're talking about infection rates. We're talking about hospital capacity. Separate the emotion from the logic, and we have to act as our logical selves here. And that's what smart means. Be smart about it. Don't be emotional. Don't be political. Don't get pushed politically into a situation. Protesters are in front of the Capitol. We better reopen. No, I'm not going to do that. That's not how we make decisions. The first point is CDC set guidelines as to reopening for states. We think those CDC guidelines make sense, which is you have to have a 14-day decline in the number of hospitalizations before you go forward. Second, identify industries that you can start reopening that will bring people back to work, get the economy going, but you know you can do the appropriate precautions and social distancing. So in phase one, we're talking about the construction and manufacturing industry, right? Those are two industries that employ a lot of people, but we believe you can put the right precautions in place and learn the lessons from where we have been. And say to those businesses, this is not just about government, say to the businesses, tell us how you are going to incorporate the lessons that we just learned. How do you incorporate social distancing? How do you incorporate fewer people in the space so you reduce density? How do you have the right PPE? How are you going to monitor? Are you going to take temperatures of everyone who walks in? That's for businesses to decide also. Separate point, make sure you don't have what we call attractive nuisances. Not really the right use of the term. Attractive nuisance is a legal term. But an attractive nuisance in this context, you open up a facility or an attraction that could bring people from outside the region to you. You have all this pent-up demand in the whole tri-state region. Make sure you don't open up something that's going to bring hundreds of people from the outside in. What business precautions will those individual businesses take? Watch the healthcare capacity. Your healthcare system cannot go over 70% capacity. Again, there's a 2-week lag. If you're at 70%, bells should go off. Don't go over 70% in your ICU beds. Many of the people who come in with COVID need an ICU bed because it's a respiratory illness. As a matter of fact, almost at the heat of this, almost every bed in a hospital turned into an ICU bed. That's why we needed the ventilators, because these people who get seriously ill with COVID need that level of care. Remember, you have a flu season coming up in the fall, and the number of hospitalizations normally goes up in the flu season. So anticipate that. Stockpile the equipment. We learned a lot of painful lessons here. One is you have to have the PPE, you have to have the masks, you have to have the gown. There's an international demand on it. So make sure we have a stockpile or reserve of the PPE. We have to have testing. How many tests? Dr. Birx recommends 30 per 1,000 people. Different people have different numerical percentages. But I think we start with that. Do we have enough testing sites? How long does it take to turn around a test? And then are we advertising to people, this is where you go and this is what you do to get a test if you think you may be infected? The whole thing with keeping that infection rate down is find a person early who is infected, let them know it, and then trace and then isolate. Do we have a tracing system in place? Mayor Bloomberg is helping us organize this. It's never been done before. Nobody ever heard of tracing to this extent. But tracing is, once a person says they're positive, you trace their contacts back, you notify people, you test people. That's a whole different operation. The current recommendation is you need at least 30 tracers per 100,000 people. So we have to have that in place. You have to have isolation facilities in place. Isolation facilities are when someone gets sick, you know they're positive, and they don't want to go home to quarantine, because if they go home, they could infect their family, which is what's happening now, a lot of these new cases. So we have to have a facility where somebody who is positive can quarantine for the 2 weeks without going home, and we have to identify them now. We have to coordinate regionally, the schools, transportation network, testing, tracing. This all has to be coordinated on a multi-county effort. We have to reimagine telemedicine, reimagine teleeducation. We have to have a regional control room that is monitoring all these indicators and gives us the danger sign if we get over 70% capacity, if the infection rate pops up. We have to have one central source that's monitoring all these dials that hits the danger button so you could actually slow down the reopening. And then we have to protect and respect essential workers, which I'll talk about in a moment. On businesses, they have to have social distancing, continued testing, ongoing monitoring protocols. That's all part of the new normal, and businesses are going to have to do that if they want to reopen. They're going to have to adopt the federal and the state guidelines on this issue. Today we're announcing an advisory board that is made up of statewide business leaders, academic leaders, civic leaders, who's advising us on just this, and they have been for weeks, and I want to thank them very much. Manufacturing construction as the first phase businesses, that's 46,000 jobs in a place like central New York, so it's a major employer. And these are businesses that can adopt to the new normal in terms of their employees, in terms of the places of business, and in terms of the processes that they put in place. On the healthcare capacity, again, we just lived this. We cannot be in a situation where 70% capacity is exceeded. You need at least that 30% buffer on hospital beds. And you need 30% of your ICU beds available if that number starts to tick up. In terms of testing, we have to have the testing regimen in place, and we have to prioritize the people who get tested. Symptomatic people, individuals who came in contact with a symptomatic person, and frontline and essential workers. They do have a higher rate of infection because they're putting themselves in harm's way, and we want to make sure they have the testing so we have an early alert system. You have to have the right number of sites. Testing won't work if it's impossible to get. Testing won't work if it's too hard to get. So you have to have the right number of sites for the area that you're dealing with. The advertising is very important. It has to be available, but people have to know it's available. And they have to know what the symptoms are that would have them go get tested. Because again, this is about people understanding it and people buying into it. This is not government orders. This is people get it, they know the facts, they know what they're supposed to do, and they do it because they have been, we've communicated successfully the circumstances and the facts. But you need that testing, and you need it to trace the contacts. Otherwise, you see that infection rate increase. On the tracing, the estimate is 30 tracers for every 100,000 people. So that's a data point. That's what it means to have tracing in place. And then isolation facilities is a proportionate number of people who test positive, who say, I can't go home, or I don't want to go home. I don't want to infect my family. I don't want to infect my significant other. I have enough issues without having to explain how I infected my significant other with COVID, which is a valid point. So isolation facilities available for those people. And then the regional control room, where you're monitoring all of those metrics. You're monitoring hospital capacity, the rate of infection, the PPE burn rate, how businesses are complying, and it has an emergency switch that we can throw if any one of those indicators are problematic. Because remember, we have gone through hell and back over the past 60 or so days. What we've done has been tremendous, really tremendous. And people have done, what the American people have done, what New Yorkers have done, has been to save lives, literally. But we have to remain vigilant. This is not over. I know as much as we want it to be over, it's not over. And we have to respect what we accomplished here. When they started this, the projections for this state were 120,000 New Yorkers were infected and hospitalized. Only infected and hospitalized. How could they be so wrong? They weren't wrong. We changed reality. The differential, the variance, is what we did. It's the close down, it's masks, it's all of that. We reduced the rate. We so-called flattened the curve. Well, that meant 100,000 fewer New Yorkers didn't get seriously ill, didn't go into a hospital, didn't overwhelm the hospital system, and a percentage of those people who got seriously ill would have passed away. So we literally saved lives. We can't now negate everything that we accomplished. We have to do the opposite. We have to take this experience and we have to learn and grow from the experience. And we have to build back better than before. As a society, as a community, we need better systems. This exposed a lot of issues, fundamental issues. We have to do a better job on teleeducation, remote learning. Sounds great. But you have to have all the equipment, people have to be trained, and teachers have to be trained. We jumped into it. We have to do a better job. We have to do a better job on telemedicine. Not everybody has to show up at the doctor's office. You can do a better job. We have to do a better job. I mean, when you look back, and lands in the United States the next day, right? Everybody talks about global interconnection and how fast you can. Everybody knows there's a virus in China last November, December. China says, don't worry, we're taking care of it. Yeah, but all you need is one person to get on a plane. Through Europe. But where was the whole international health community? Where was the whole national host of experts, the WHO, the NIH, the CDC, that whole alphabet soup of agencies? Where was everyone? Where was the intelligence community with the briefings saying this is in China and they have something called an airplane and you can get on an airplane and you can come to the United States? Governors don't do global pandemics, right? But there's a whole international, national health community would do that. Where were all the experts? Where was the New York Times? Where was the Wall Street Journal? Where was all the bugle blowers who should say, be careful, there's a virus in China that may be in the United States? That was November, December. We're sitting here, January, February, still debating how serious this is. And again, it's not a state responsibility, but in this system, who was supposed to blow the bugle and didn't? Because I would bank that this happens again, and is the same thing going to happen again? I hope not. So we have to figure these things out. We also have to remember that as a society and as a community, we're about government and we're about systems. But even more, we are about values. What makes us who we are our values. And that's my last point, which is point number 12, protect and respect the essential workers. I had two nightmares when this started. One, that I would put out directives on what we need to do, and 19 million New Yorkers would say, I haven't been convinced, I'm not going to do this. Because look at what the directives were. We're going to close down every business. You have to stay in your home. I mean, the most disruptive government policies put in place, I can't even remember the last time. I can't even see in the history books the last time government was more disruptive to individual life. No businesses, everybody stays home. No schools. What happens if New Yorkers said, we're not doing that. We're not doing that. It's too much. It's an overreaction. It's political. Because everything's political nowadays, right? So easy to say, well, that's just political. That was a fear. Because if New Yorkers did that, governmentally, had no ability to enforce 19 million people staying in their homes. That's why the communication was so important. Give them the facts, give them the facts, give them the facts, so they understand why. That worked. Second nightmare was, what if the essential workers don't show up? You have to have food. You have to have transportation. The lights have to be on. Someone has to pick up the garbage. The hospitals have to run. What if the essential workers said, I'm not showing up? You communicated so effectively the fear of the virus that the essential workers say, yeah, if everybody's staying home, I'm staying home too. That could have happened. I went through the HIV virus when HIV started. People were petrified. Nobody knew what it was. Nobody knew how it lived, how it was transferred, how long it lived. People were petrified. Nobody wanted to go near it. What happens if the essential workers here said, I'm not going to show up to run the bus. You don't pay me enough to put my life in danger. I'm not doing it. They showed up. They showed up. I just finished communicating how dangerous this was to convince 19 million people to stay home and close schools and close businesses, and the essential workers still showed up. That is a value. They didn't show up for a paycheck. They didn't show up because government asked them to show up. They didn't show up because their employer said, I need you to show up. They showed up out of their values and out of their honor and out of their dignity. That's why they showed up. My grandfather, people know my father in this state, my grandfather, little Italian immigrant, Andrea Cuomo, named for him, no education, ditch digger, came here, the classic immigrant story, winds up having a little grocery store in South Jamaica, Queens, poor community. And during the Depression, he almost lost the store, and he'd love to tell the story. Why did he almost lose the store? Well, it was the Depression and the finances. No, because he gave away food during the Depression, because he wouldn't let anyone be hungry. So a family would come in, nobody had money, it was the Depression, and he would give them food. And he was giving away so much food that he had problems paying his bills. gave him a lot of stress, wound up having a heart attack as a young person. But no one told him to do that. That was just his values. And I would ask him about it afterwards. I said, Grandpa, why would you? He said, what am I going to do? Let them go hungry? I'm going to let somebody go hungry? That was unimaginable to him. He was an essential worker. Nobody called him an essential worker, but he was an essential worker. And that's what people are doing day in and day out here. The person who delivers the groceries, the person who's driving the bus, the person who's driving the subway, the nurses, the doctors, the orderlies, all these people who are showing up every day. Not because of the check. They could stay home too and file for unemployment. No, they're doing it out of their sense of honor and their sense of dignity and their sense of pride. This is their mission. This is their role. They're New Yorkers. They're Americans, and they're going to show up. The police officers, the firefighters. I mean, everyone's petrified. You're going to be a police officer? You're going to pull people over in a car? You're going to go into a house for a domestic disturbance? Wrestle with somebody in the house? You don't know who it is? That's what they do. That's their job. That's why I wanted to thank the healthcare workers. And everybody thanks the healthcare workers. But it's not just the healthcare workers. It's all the people who've been out there all this time, making sure everyone else could stay home. They have higher infection rates. They're getting paid a minimal amount of money. They have families at home, too, that are suffering. But they're getting up every day and they're doing their job. So as we talk about reopening, protect and respect the essential workers. They need testing. They need equipment. They're putting their lives on the line. Protect and respect the essential workers. Public transportation, we've kept running because they need it to get to work. That's why public transportation continued. We talked early on about closing down public transportation. They said, forget it. That's how the nurses are getting to work. That's how the orderlies are getting to work. Nobody will be in a hospital. Nobody will be there to deliver the food. Nobody will be in the power plant to keep the lights on. Nobody will be at the telecommunications department. Public transportation is vital for them. Well, then make sure public transportation is safe and disinfected. The New York Daily News ran a story today on the public transportation in New York City. And their front page is a picture of a subway car filled with homeless people and their belongings. Respect the essential workers. That is disgusting, what is happening on those subway cars. It's disrespectful to the essential workers who need to ride the subway system. Upstate New York need to ride the buses to get to work. They deserve better, and they will have better. We have to have a public transportation system that is clean, where the trains are disinfected. You have homeless people on trains. It's not even safe for the homeless people to be on trains. No face masks. You have this whole outbreak. We're concerned about homeless people, so we let them stay on the trains without protection in this epidemic of the COVID virus? No, we have to do better than that, and we will. And we will learn from this, and we'll be better from this, because we are New York tough. And tough means not just tough, because tough is easy. It's smart, and it's disciplined, and it's unified, and it's loving. And that's who we are, and that's what we are. And that's why we got through this as well as we have thus far together, because of our values, because of our respect, our dignity, our mutuality, our love for one another, our willing to sacrifice, and because we're fortunate where we have many, many heroes in our midst. not because they have medals on their uniforms, but because they have honor in their souls, and they have strength in their character, and they have dignity and pride in themselves, and because they show up every day, to make sure everyone is protected. And they have to be at the top of the list. They're going to be at the top of the list in the next iteration of whatever this is. They're going to be at the top of the list at the Golden Gate. But they deserve our respect and protection here, and they're going to get it. Questions?
Governor, Michael Benny from CNY Central. This week you introduced a lot of folks to the concept of an attractive nuisance. And in Central New York, we have the Syracuse Nationals Car Show, of which I know you're a fan. The State Fair, last time around, drew 1.3 million people. Our lakeside towns, when you think about summer, Central New York in the summer, in my estimation, is an attractive nuisance. How can these things go on?
Yeah, it breaks my heart, but they can't, unless it's done statewide, and unless it's done not just statewide, but with our neighboring states. We had a situation in Connecticut where they had certain things open that we didn't have open. They had waterside parks, just what you mentioned. And Connecticut called and said, I have all New York license plates in my parking lot. People will get in the car and drive several hours to go somewhere. Look, if you opened the State Fair this year, you'd have the highest attendance we ever had. That I can guarantee you. But it wouldn't be good. Everything is about reducing density. So it would have to be statewide. Parks, beaches, waterside attractions, that would have to be statewide, or whatever region did it without the others, you would have a massive infusion of people from everywhere.
And that's New York Governor Andrew Cuomo with his latest daily update. Balance of power continues. Let's listen in.
In the second quarter, that kind of thing would probably call for more stimulus.
Boy, that's one I didn't see, I have to confess. What about the question of inflation versus deflation? I mean, they're also meeting on the heels of a negative futures number on WTI contracts. Do they have to be concerned a little bit about where we're going with the possibility of deflation?
That's what they're really concerned about now. They're not concerned about inflation. We thought when this might be just a supply problem that it could be inflationary, but it's turned out to be a demand problem, and that leads to deflation. We're already seeing prices go down, and certainly the break-evens on Wall Street have dropped. 2 years is now negative, so nobody thinks inflation is going to be a problem, and that's a partly good thing for the Fed in that it enables them to keep rates low for a long time without worrying about it. But eventually they're going to want to see some inflation because it also helps inflate away some of the debts that we're incurring.
At the same time, given all that they've done, there's precious little more they could do to try to reinsert some inflation into the system, is there?
Yeah, there isn't much. I mean, given the fact that they had interest rates at 0 for 7 years and we didn't see any inflation to speak of, doesn't augur well for what they might be able to do going forward. But there's so much cash in the system, and we are going to see a turnaround at some point in energy prices and other prices. And on a percentage basis, we might see inflation rise. It may not last, it may not be significant, but we'll probably get over 2%, maybe close to 3% in a year or two. That's down the road, but it's something they're going to keep an eye on.
Okay, thank you so much to Michael McKee, our colleague. In the meantime, coming up on the second hour of Balance of Power at 1 o'clock Eastern Time, I'm going to have an exclusive interview with Alan Greenspan, the former chair of the Federal Reserve. That does it for Balance of Power for Bloomberg Television and Radio.
This is a Bloomberg Pursuits look at luxury. Not everything in the time of coronavirus is bad news. First night of the NFL draft, for example, held digitally, was the league's most watched opening round ever, up 37% from last year. There appears to be pent-up demand for new sports content of any sort. The first 2 episodes of ESPN's Michael Jordan documentary drew record numbers for that network last week. The $1 billion video game coaching business is also ramped up during lockdown. Between December and March, the amount of time people spent playing popular shooter games such as Fortnite and Overwatch nearly doubled. And for travelers, when you can travel again, here's a silver lining. The dreaded coach class middle seat is gone. For now, near-empty planes allow carriers to give passengers more space for the sake of social distancing. For now, at least, U.S. carriers plan to cull their schedules by as much as 90% for May and June, given the meager sales, leading to fewer but more crowded flights. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
You're living in a world built on science, political and economic.
You've got to believe the labor market gets hit.
Computer and medical.
Clarify where we are on a test.
It all makes a difference.
What do you think needs to happen in terms of governmental response?
And it's all here.
He expects the virus to peak quite a long time from now.
Get your science straight.
The hand-washing campaign, is this actually a good strategy?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg. The world is listening.
The possibility of lung cancer can be pretty scary, especially if you're one of approximately 8 million current or former smokers at high risk. That's why SaveByTheScan.org wants you to know that now there's a breakthrough low-dose CT scan that can detect lung cancer early, and it only takes 60 seconds. You stop smoking. Now start screening. For an easy quiz to see if you're eligible, visit SaveByTheScan.org. It could save your life. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a mixed day now on Wall Street. The Dow, the S&P higher, NASDAQ lower, a slide in the biggest U.S. technology shares, weighing on major equity gauges as consumer confidence crashes and more companies withdraw earnings guidance. The dollar weakened. S&P 500 index little changed right now. NASDAQ is slumping as data showed U.S. consumer confidence dropped in April to the lowest since 2014. Apple, Facebook, Netflix are among the biggest drags on the tech-heavy gauge. Apple, for example, down 0.6%. Facebook slumping 1.6%. Netflix lower now by 3.1%. After the bell today, we will be hearing from Alphabet, that is the parent of Google. Right now, we've got the S&P 500 index up a point, little change. Dow Jones Industrial Average up 74 points, higher by 0.3%. NASDAQ, as I mentioned, hard hit today, down 60 points. That is a drop of 0.7%. 10 years up 15.30 seconds with a yield now of 0.60%. Gold is down 0.5% at $17.05 the ounce. And West Texas Intermediate crude swinging between gains and losses. Right now we'll call it flat, little changed at $12.75 a barrel. And with more on the oil story, here's Bloomberg's Renita Young.
Yes, after that sudden index shift spurred a fire sale, it unleashed another day of chaos in the global energy market. And gold prices saw pressure earlier this morning as major economies shift toward reopening, but prices are still near their highest in more than 7 years amid the global coronavirus pandemic. Investors are also tracking the stimulus by governments and central banks to aid growth, with some policy announcements coming as early as this week. Renita Young, Bloomberg Radio.
Lots Lots of earnings news today. The world's biggest maker of mining and construction equipment is predicting that the pain from the coronavirus crisis is far from over. Caterpillar says the current quarter will be, quote, more significantly impacted by the pandemic after profits for the first 3 months of the year trailed analyst estimates. The Deerfield, Illinois-based company also shelved its traditional earnings forecast for 2020 as the fallout from the virus jolts customers in mining, construction, and energy. CAT shares, they are higher now by 0.4%, up 44 cents. Caterpillar at $115.69. The pandemic increased sales of Merck medicines during the first quarter as households around the world stocked up, but the drug maker expects a significant hit this quarter as the full force of the outbreak lands. Merck shares down today by 2.5%. Xerox Holdings, which last month dropped a hostile takeover bid for larger rival HP Inc., has withdrawn its annual revenue forecast, signaling uncertainty over how high a toll the economic showdown from the COVID-19 pandemic will take on the copy machine maker. Again, recapping, equities are trading mixed. We've got the S&P up 3, up 0.1%. Dow Jones Industrial Average up 79, up 0.3. NASDAQ lower now by 56, down 0.7%. I'm Charlie Pellet, Bloomberg Radio.
For our Bloomberg television and radio audiences worldwide, I'm David Weston. Joining us now for a very special chat is the former chair of the Federal Reserve. He is Alan Greenspan. So, Mr. Chairman, thank you so much for joining us. The FOMC is meeting even today and tomorrow. I think one of the things all of us want to know, and I know we'd value your view on, how deep and how long is this economic crisis that we find ourselves in? What do you project?
Well, I think it's going to be longer than we suspect, largely because the defining characteristic of the next century will be an inexorable aging of the population. More than 18% of the population of the industrialized countries of the world are age 65 and older, and until the last century, the vast proportion of the population worked until they died. Retirement was a rare outcome. As a consequence of this, U.S. retirement benefits, especially Social Security and health care, have escalated significantly and are projected to expand materially further in the decades ahead. And that is an issue which I can explain in some considerable detail for you as to what I think is going to happen. But I think it's going to be a dominant force in slowing down the rate of growth. And it's unclear at this stage whether we are going to be looking at the type of pattern that Sweden looked at for a number of years and cured, or we're going to be in trouble.
But, Mr. Chairman, what is the solution to that, or the answer to that? Because if anything, this pandemic, I think, will push countries, the United States and other countries, perhaps in the direction of greater social support, of greater social benefit programs, because so many people are being hurt so badly.
I absolutely agree with that. I think that the bottom line is that retirement benefits and essentially Social Security, Medicare, and the like are going to be major forces in the years ahead and in government programs.
At the same time, as the Federal Reserve meets today, should they be more concerned about deflation at this point than inflation? We've had, as you know, oil futures contracts actually trade well into the negative numbers. Commodities are weak around the world, and the go-forward inflation numbers are quite disturbing. Is there a real risk of deflation right now in the United States and globally?
Let me just say, I'll answer it generically, but since I've left office, I've been very scrupulous in not commenting specifically on what my successors were doing. But as a general question, there's no doubt that the problems involved with the difficulties of recent weeks are having a profound effect. and you can judge them as well as anybody.
Glenn Hubbard, whom you know, the economist now at Columbia, has warned about demand destruction and the possibility of what he calls a doom loop. Do we face even the prospect of a possible depression, not just recession?
No, that's a little bit. That presumes that we don't take the type of actions that Sweden did and resolve the problems which are very similar to those in which we have been confronted with. And what that would fundamentally entail is solving the whole question of how you go from a socialist society, which Sweden was, and it finally collapsed in the late 1990s, and made major revisions of the type that were we to make would make our Social Security, Medicare, and other problems get resolved. But we are nowhere near that as yet. And it gets to a lot of issues which I'm not sure we want to get into. But the problems are out there, and I hope we come to grips with them sooner rather than later.
But I wonder, Dr. Greenspan, whether we haven't taken a step, and maybe it was the right step, but a step in the direction of what you call socialized economy, starting with the 2008-2009, but certainly now, with the extent to which the federal government, through fiscal means, is really intervening into the economy very regularly, and for that matter, the central banks, not just the Federal Reserve, but others, have grown their balance sheet to an increasing degree. Investment decisions even depend as much on what we think the government's going to do as on what we think the economy is doing or the consumer.
Well, I would say the investment process of all the companies with whom I dealt could not get around the fact that what the government is doing is having a very significant impact on the financial world, and the financial world is where the bottom line is profits and what you're working at. So I fully concur with what you're saying, and we are moving in directions which are quite surprising, and obviously the virus issue coming up has made us a very much more difficult problem to deal with. But how we come out of this thing is going to depend very much on fundamental issues with respect to government. And it seems ironic that I'm saying, we ought to be looking at Sweden, which used to be the quintessential socialist society, as the measure which we ought to direct ourselves at to get our system in more balance. And I speak to a lot of people. Very few people listen.
Well, so we're listening, and we want to hear what you have to suggest, because any crisis, from what I've read in history, can give opportunities as well as real perils. If we were to, forgive the expression, use this crisis to move the economy, move the government in the direction you think would be more constructive, how would we do that?
Well, I think the first thing is to recognize that what the data remarkably show is that for the last 50 years, social benefits have been crowding out gross domestic savings in the United States, dollar for dollar. And that has meant effectively that if gross domestic savings is being reduced, that's being the major source of gross domestic investment, then we are dealing with a situation where productivity growth slows down, which is precisely what has been happening. And if what we need to do, we're now at a 1% annual rate of productivity growth. That's intolerably low, and unless and until we can turn it up, and the only way we can do that is by structuring our investment towards capital goods, and we're not doing that in an effective manner at the moment.
There are some who are very concerned about what's going on in the government right now because of what is called moral hazard. That in the effort to bail out companies, that we are bailing out some who have been profligate, not just those who have been prudent, including investing in things like high-yield bonds and things like that. Is this a time to be concerned about moral hazard, or should we put that to one side and deal with the much bigger hazard of the coronavirus?
I think it's put it aside. It's not a. I mean, I agree it is an issue, but there are lots of issues which we can deal with without really being concerned about them.
And Dr. Greenspan, how do you assess the situation with unemployment? Obviously, we've lost 26 million jobs or so in 5 weeks. There are projections it will get worse. Some people say it may even get to an unemployment level that beats what was going on during the Great Depression. What do you project in terms of unemployment through the rest of the year?
Well, the problem basically is we actually are looking at the terrible first quarter, obviously. Second quarter is pretty awful. But if the issue of the virus works its way the way we expect, we probably have a very strong third quarter. But my concern is the fourth quarter and beyond. It's the years ahead where the changes have got to be made. And I would be less concerned about many of the issues which confront us today, although I do say, importantly, the virus issue has got to be resolved in a rational and sensible manner and change, for example, Social Security benefits and the way they are paid so that we don't run into the crisis that Sweden ran into as a consequence.
Briefly, in conclusion, what's the one thing that you would recommend if you were called up today by whoever's in charge and said, what should we do? What would you tell them?
First thing I wouldn't do is lift up the telephone.
You wouldn't pick up the telephone and take the call?
I do talk to my clients, and I do give them my views, but I try to keep my nose out of federal affairs.
Yeah, well, it's probably a wise position to take. We really appreciate your spending some time with us today, Alan. Really good of you to do. That is, of course, Dr. Alan Greenspan, the former chair of the Federal Reserve, just on the day of and before the decision tomorrow of the FOMC. That is Dr. Alan Greenspan. And coming up on Balance of Power, the Conference Board released its Consumer Confidence Report for April this morning. We're joined by its chief economist, Bart Van Ark. That's next on Balance of Power on Bloomberg Radio. Oh, and now for I'm Charlie. I'm sorry, Charlie.
That's all right.
I tossed you market check.
That's all right.
I was so absorbed in Alan Greenspan, I wasn't paying attention.
And rightfully so. Great interview, David Weston. A lot going on right now, and here's what's happening. We've got the Dow, we've got the S&P, both higher. NASDAQ is lower. But first, just want to bring you these headlines from the Bloomberg Professional Service. Hillary Clinton will endorse Joe Biden today, joining a group of Democratic leaders who are coalescing around the presumptive nominee. Clinton, you'll recall, was the 2016 Democratic nominee. She tweeted today that she would be, quote, the special guest for Biden's scheduled town hall on the impact of the coronavirus pandemic on women. President Trump, meanwhile, will order U.S. meat plants to stay open amid the pandemic. Tyson shares surging on the news, up now by 6.05%. And the number of Texas COVID-19 cases has risen 3.5% to 26,171. Texas is also reporting that hospitalizations are jumping. We're seeing a rally today, at least for the Dow Jones Industrial Average advancing. Right now we have got S&P also higher. NASDAQ Composite Index, so on the minus side. Let's begin there. NASDAQ is down 61 points. That is a drop of 0.7%. S&P up by 0.5 point. Little change there. The Dow up by 54, a gain there of 0.2%. A slide in the biggest U.S. technology shares weighing on major equity gauges as consumer confidence crashes and more companies withdraw earnings guidance. We will have more on the consumer confidence story for you coming up in just a moment right here on Balance of Power. S&P 500 index virtually flat right now at 2874. The Dow up 46, up by 0.2%, 24,177. And NASDAQ is down 62. That is a drop of 0.7%. 10-year up 15.30 seconds with a yield of 0.61%. Gold is down 0.5%, 17.06 the ounce. West Texas Intermediate crude now at $12.86 a barrel, little changed higher by 7 cents. That is a gain of just about 0.6%. Xerox Holdings, which last month dropped a hostile takeover bid for larger rival HP Inc., has withdrawn its annual forecast, signaling uncertainty over how high a toll the economic slowdown from the COVID-19 pandemic will take on the copy machine maker. BP bolstering its financial reserves as the initial stages of the coronavirus pandemic causes its profit to plunge and increases its debt. Among oil companies today, the ADRs of BP down by 0.6%. U.S.-based oil companies are pushing higher. ExxonMobil, for example, up 1.6%. Chevron up by 0.1%. ConocoPhillips up 2.9%. Apple's retail chief has told staff she expects the company to reopen, quote, many more of its retail stores in May after closing all locations outside of China in March due to COVID-19. Apple shares down now by 0.8%. Again, recapping, S&P down by 0.5 point, the Dow up by 44, up 0.2%. NASDAQ is down 63, down 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. I'll never forget you again, I promise.
And never a problem.
One of the big issues facing all of us, basically, is how to test for the coronavirus, as well as how do we train our frontline medical workers. Well, earlier today, Johns Hopkins Hospital nurse manager Nasa Ernst spoke to our colleagues Francine Lacqua and Tom Keene about those questions.
Testing is not necessarily my area of expertise because there are so many different tests that are around. What I do know is that there's been a tremendous response throughout our health system, as well as many other health systems, to really get out and aggressively test the community and follow some of the ideas that we've learned from the other areas of the world that have been tackling coronavirus.
Nasa, there have been a number of reports, about ventilators, the use of ventilators, whether they're good or not. One of the things that's also come in Europe is the fact that actually, because there's a shortage of frontline medical workers, that you're retraining others to try and do these very difficult procedures at times. How is that going?
That is very interesting. It's actually going very well. It was very difficult in the beginning. The profession of medicine is very protocolized, and it's not necessarily very agile. So you would have to change not only your skill set, but your mindset in order to provide the safest, highest quality patient care. You bring up a really good topic. We have what we call proning teams. We have found that proning, which is a physical maneuver that's very common I'm in endoscopy. We do it all the time with patients that are sedated in order to get them more oxygenation. And we found that by proning patients early and often, we reduce the use of ventilators in a lot of our patient care areas.
Nasa, good morning. Tom Keene in New York. Thank you for being with us today. You're one of the rarest things out there. You were out in the real world doing terrible jobs, and then you finally got a real job in nursing along in your career with Sheraton, Johnson & Johnson, and others. I want you to talk about the nursing profession now. How are nurses as an industry going to come out of this pandemic? They've got to be changed after what we've all observed. Where will nursing be in 2 years, in 5 years, in 10 years?
That's a great question, and I was actually thinking about that when I was driving in. You're right, I have a business background. I came into nursing as a second career. One of the things that this pandemic is showing us is that nurses are going to take a very different role 2 years, 5 years, 10 years down. Nursing is what I call very silent work. No one really knows what we do. And I think this pandemic has shown the world what we do and what we do well. Nurses are incredibly innovative and creative, and they're also very, very good at maintaining high-quality patient safety standards.
Yeah, but when do they get respect within the system? And I'm not only talking about nursing folks, I'm talking about the interns, the residents, the people in the trenches of these hospitals. It seems like, am I right, they're the last ones to get paid? When does that change?
You know, I can't answer the pay question. I can tell you what is interesting here, and I'm speaking specifically for Hopkins. One of the things that Hopkins has done is recognize and honor every employee in this organization who comes in every day to provide some type of care, either direct patient care or indirect patient care. One of the other things that this pandemic has shown us is that, you know, we're a big institution. We're no different than a lot of other healthcare institutions. We're big, we're lumbering. It takes us years to make a decision. This pandemic has shown us that you're right. There are people right at the front line who make excellent decisions in a very short period of time that make a huge difference in a patient's outcome.
That was Nasa Ernst of the Johns Hopkins Hospital, where she is a nurse manager. And now we want to turn to the really all-important question of consumer confidence. Just over 2 hours ago, the Conference Board released its report on consumer confidence. No, 3 hours ago. I have to correct myself. Just over 3 hours ago, the Conference Board released its report on consumer confidence for the month of April. And it showed, actually, confidence has gone down quite a bit, but gave a little bit of hope in the out months. We welcome now Bart Van Ark. He is Chief Economist for the Conference Board. So thank you so much for joining us, Bart. Really appreciate it. Give us your take on what these numbers tell us.
Well, the headline number, of course, shows a big decline. We show a decline in the confidence of consumers of 32 points just in 1 month time, and that's the biggest month-over-month decline that we have seen since the history of this index in 1967. So this is a pretty big deal. But when you really sort of unpack it a little, you see that the present situation index, so that's the assessment of consumers of today's situation with regard to the job market, with regard to the business environment, that has shown an even bigger decline, 90 points just from 167 to 76. And that basically puts the consumer in recession territory. So they basically feel that, this is really clearly a recession right now. However, there's a little glimmer of hope. The other part of the index is the expectations of the consumer. So now it's about what do you think about future employment conditions and business conditions and your income situation. That has slightly improved. I think a lot of that has to do with the fact that, at some point you get so negative that, the future can only look better. However, there's one little downside there. Income prospects are still weak, and that tells us something about the fact whether or not the consumer is prepared to start spending, even if the economy starts to open up again.
So take us a little bit into your methodology, if you would, Bart, because it's important to understand exactly what we're getting out of these numbers. Is this more directed to how the consumer feels about their job prospects and their income prospects, or their balance sheet?
It's all three. I mean, actually, consumers have a pretty good outlook on where the economy is going, what they see around them. And, in that sense, you get a clear perspective from them. It's not only CEOs who can look at that. It's also consumers who feel what's going on there. But yes, of course, the jobs are important. The jobs feed into their income. But it's interesting that even though they do see jobs improving, they've of course seen these huge numbers of people applying for unemployment claims. So they think they can only get better, but they don't really think it's going to help their income much. So the household balance sheet is still going to look very weak over the next couple of months. And I think that's an important factor to continue to follow what happens in the near future.
And what period of time, when you ask expectations, how far out are people looking when you ask that question?
We asked them about 6 months, so it does cover things like, for example, now the summer period. So we do ask some sub-questions about, for example, your spending categories, where are you going to spend more or less. Now, there's basically no category where people are going to spend more in the next 6 months. They spend significantly less on things like vacations. They will come down. Automobiles also will come down. So those are really two categories that are seriously down. There's only one category that I think, shows basically unchanged. That's TV sets, because, now that we're at home, we need to make sure that we can entertain ourselves with TVs.
That's interesting. So that was the one that doesn't show any diminishment. What are the ones that show the largest reduction anticipated?
The ones I just mentioned, automobiles and vacations are the ones that really drop. So those are, a lot of these are what we call discretionary expenses, right? You can either, buying a car, you can postpone. So, you may see that come back later once the economy starts to improve again. We call this pent-up demand. That can come back. But vacations is a different story, because if you don't have your vacation now, it doesn't mean that next year you're going to have 2 vacations, right? So a lot of that kind of services discretionary spending, if you don't do it now, it's gone, and that could have a permanent negative effect on the economy.
Bart, do you ask things like staples, like groceries, things like that? People stocking up, because I think we saw some increased spending as we went into this.
Yes, we've seen increased spending, of course, in the last couple of months when we headed into this crisis. That has been visible. But again, in the last couple of weeks, I don't think we continue to see that. Most of our questions are more about the durable goods spending. But I think overall, the retail industry is doing still fairly well. People still need to buy stuff. But this kind of stocking up that has happened in March is something that we are not seeing right now.
Do you change your methodology at all over time, or is it terribly important to you just ask the same questions month after month so you have a track?
No, it's really important to ask the same question month over month. So since 1967, we're basically asking those same questions all the time in order to see what is going on. It also helps us really to understand what happens in different points in time. So, for example, now we can compare with, for example, the Great Recession. Now, during the Great Recession 2008-09, we actually saw that consumer confidence could go down much further. It went down into the 20s, and we're still now today into the 80s. So this can still go down quite a bit, and that is really going to now depend on how this whole thing is going to unfold. It's encouraging to see that people hope for better. But our biggest worry, of course, is that once we begin to open up the economy, that the risk of a second wave is going to increase. And if that would happen, or even that if consumers would think that this is a significant likelihood that things might turn south again later in the year, we can go much deeper with this.
Yeah, optimism turns to pessimism at that point. Thank you so much to Bart van Ark from the Conference Board. Really great to have you with us. And now for a market check, we're going to Charlie Pellet.
All right. I thank you very much, David Weston. Here's what's going on. Keeping track of Tyson shares. They are up now by 6.6%. President Trump plans to order meat processing plants to remain open, declaring them critical infrastructure as the nation confronts growing disruptions to the food supply chain. This, according to a person familiar with the matter. That person, the source says, Trump will be using the Defense Production Act to order the companies to stay open, and the government will provide additional protective gear for employees as well as guidance. And just repeating an additional headline, Hillary Clinton will endorse Joe Biden later this afternoon. U.S. stocks, they are trading mixed right now, with the S&P and the Dow both higher. S&P's up 2 points, a gain of less than 0.1%. We've got the Dow up 64, higher by 0.3%. NASDAQ on the minus side, down 57. That is a drop of 0.7%. A slide in the biggest U.S. tech shares, weighing on major equity gauges as consumer confidence crashes and more companies withdraw earnings guidance. S&P 500 index again up by just about 1 point right now. Apple, Facebook, Netflix among the biggest drags on NASDAQ. We've got Facebook shares, they're down 1.6%. Apple slumping 0.8%. Netflix lower by 3.3%. Should mention that after the closing bell today, we will be hearing from Alphabet, that is the parent of Google. Its shares down now by just about 2.3%. America's economy is buckling under the weight of the coronavirus outbreak, heralding the end of the record-long expansion. And with more on that story, here's Bloomberg's Vinny Del Giudice.
The Conference Board's Consumer Confidence Index dropped in April, posting the largest decline since the 1970s energy crisis. Households are haunted by rising unemployment and dwindling income. The merchandise trade deficit widened. Exports and imports dropped in March to the lowest in almost 3 years as the outbreak crippled global demand. Meantime, retail inventories rose in March as the virus cut into sales. Vinny Del Giudice, Bloomberg Radio.
Apple's retail chief has told staff she expects the company to reopen, quote, many more of its retail stores in May after closing all locations outside of China in March because of COVID-19. Deirdre O'Brien, vice president of retail and people, made the disclosure in a weekly video update. According to retail employees familiar with the matter, Apple shares down today by 0.8%. TripAdvisor is cutting about a quarter of its workforce in a bid to shrink costs as the global coronavirus pandemic decimates travel. Sources tell Bloomberg Needham, Massachusetts-based TripAdvisor is eliminating 600 positions in the U.S. and 300 people in other offices around the world. Those sources say most remaining employees will be forced to take a 20% salary reduction, and the company will be closing offices in San Francisco and downtown Boston. TripAdvisor shares today, they're actually trading higher. TripAdvisor up now by just about 2%. Oil moving lower today after a brief bounce higher amid the aftershocks of a major index tracked by billions of dollars in funds exiting near-term contracts for fear prices may turn negative again. Among some of those oil stocks, BP down 0.1%, ExxonMobil up 2.2%, Chevron up 0.6%, and Conoco up by 3.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Balance of Power on Bloomberg Radio. I'm David Weston. Shutting down the economy has hit parts of the retail industry particularly hard, even as other parts, like grocery stores, have done well. Here to give us a profile of the industry and how it can recover is Brian Dodge, president of the Retail Industry Leaders Association. Brian, thank you so much for joining us. Give us your sense of where the retail industry is now. As I say, it's not one monolithic thing.
Yeah, thank you for having me, David, and I think you described it quite well. There's really two halves of the industry. One half that has been open, very active, managing incredible amounts of demand, and then the other half has been the stores have been closed. And so we are at a point now where we start to look ahead to the point at which we can begin to restart the economy. And I think the important thing is to recognize that those two halves have had the opportunity to benefit from the lessons of each other. First and foremost is for those who have been busy and dealing with traffic and incredible demand during the past 6 weeks, they have been evolving the practices to keep customers safe. And the lessons learned from their innovations will be applied as others prepare to open in the weeks ahead.
Tell us about those innovations. Let's stop there just for a moment. Do they cost a lot more money? I will say, just from my own experience, now when I go to the market, you're limited how many people can go into the store at a time. Everyone has to have a mask on. They wipe down every single cart with disinfectant. That must cost more money, doesn't it?
Well, absolutely, it does. But I think what's most important in the minds of every retailer is doing whatever is necessary to keep their customers and their associates safe. So it is more costly, but it is just simply the cost of doing business in the face of a global pandemic.
Do you have any sense of consumer confidence? We just talked to the conference board about that. We all need and want groceries, obviously. What about things like apparel? Do we have a sense the consumer is going to be there to go back out and buy things like that?
You know, I think it depends on how long we stay in this situation. We've seen really, I think, two waves of consumer behavior over the course of the last 7 or so weeks. The first was the stock up, everybody trying to make sure that their cupboards were full, anything that they envisioned needing in a lockdown situation that they would have. Some people would call elements of it being hoarding. Lots of stories written about that. The second wave was about 2 or 3 weeks later when everybody was settled into their new normal routines and discovered that they wanted to acquire things to help them get through this period of time. In some cases, that's home projects, and others, it's crafts with children or work from home requirements. You know, we're now getting to the point where we expect some of the restrictions that have been put in place to be eased. And there's ideally, we believe that there's going to be some pent-up demand. How it plays out is a bit unknown at this point, but we think there's a third wave, not too far off.
One of the things that you've proposed with your members is that there be uniform reopening plans, that the states adopt uniform plans. Tell us about that. What are you looking for there?
So the restrictions that were put in place at the beginning of this were done so on a state-by-state basis, in some cases a local basis, and that was understandable given the pace of the crisis at that point. Now, with the lessons learned of that process and the opportunity to think a little bit ahead as we move towards reopening, we think it's important for governors and local officials to think about a uniform set of rules for businesses to employ to keep their customers safe for really two very, very important reasons. One, so customers know what to expect and know how they'll be expected to interact with the retailers when they go to shop. And two, to give perfect clarity to businesses on what they need to do. We think that's important. There's too much confusion in the marketplace today, and I think consumers will benefit. Right now, the challenge is if you cross state lines or cross county lines, you may experience something different. And it's just simply, there's an opportunity to do it better coming out.
So, Brian, does that extend to the time of the opening, or is it simply what the retailers should do once they are open? Because, for example, here in New York State, Governor Cuomo is talking about having a different set of rules for the southern part of the state than the northern part of the state.
Yeah, each state is going to have to think about their timing differently, and we fully appreciate and support the notion that the public health considerations will guide the timing. What we're trying to do is help them be thoughtful about what the process looks like, but also to demonstrate that retailers have the practices in place ready to keep customers safe when they decide to open up, whether that's on a statewide basis or regional, whatever works best for the state.
One of the things that you do want, as I understand it, a nationwide rule on is the opening of warehouses and distribution centers because of the supply chain. Explain that.
Yeah, so by and large, supply chains or distribution centers have been allowed to continue to operate. And I think that recognizes two things. One, consumers are turning to e-commerce to fulfill their needs, and every family has different needs. So the opportunity for businesses to fulfill those e-commerce orders through the distribution centers is critically important right now. The second piece is so much of what's been focused on by government in terms of relief efforts has been to ensure that we have the opportunity for a quick recovery. And having distribution centers open and able to begin to prepare stores to open is critically important. The distribution centers are responsible for making sure that the stores have the right products in place so that when customers do arrive there, they find the products that they want. So it's a resiliency component in addition to serving the needs of customers as they shelter in place.
Does that extend to standards within the warehouses, the distribution centers? Because as you know, there's been some controversy about that, about what we need to do to keep those workers in those distribution centers healthy.
Yeah, obviously been a huge priority of retailers given the importance of distribution centers. They've employed many of the tactics that are used in stores, but others that are unique to those facilities. I think at the peak of this, many were doing daily temperature checks for employees coming in above and beyond the face coverings and all the other things. You got to remember too that these facilities are oftentimes 1 million or more square feet. So the notion of social distancing in those facilities is quite different than perhaps a smaller store. So the practices are certainly in place there, and I think, again, some of the lessons that have been learned there will be applied in the reopening for stores going forward.
I'm sure you've thought about the specific problems with seasonal merchandise, such as apparel, for example. I'm not sure whether we're going to be buying for the summer or the fall or the winter or whatever. What happens with the inventory?
It's a very complicated challenge for retailers to think that through, and I think each will make a decision based on what's best for them. Some will be able to put it on the shelves. Others will pack it away, perhaps for next year. Others will find other channels for those items to be sold, whether it's discount or the gray market, other places where consumers can buy them at considerably off price. But I think that gets to the complexity of the challenge that retailers are going through right now. Not only do they have the challenge of trying to manage their costs while they have no revenue, but they have materials that have come in that were destined for sale that may not actually reach the shelves.
Okay, Brian, really appreciate you being with us. That was very illuminating. That's Brian Dodge of the Retail Industry Leaders Association. Coming up, everyone from from the president right on down, agrees that testing is key to getting the economy back up and running. We're going to be joined by Andy Slavitt. He's a former HHS official, and he has a plan that he's put together with some other healthcare experts on exactly what is needed to have the testing we really have to get back to work. And we'll talk about whether it fits with what President Trump laid out at his news conference yesterday. That's coming up next on Balance of Power on Bloomberg Radio.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
In-depth analysis.
Oh, just there, Dave. Smashing. Great. Really? Night, Steve. Yeah, see ya. Built to take the big knocks. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung rugged range.
Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Thanks to national lottery players, communities across the country are about to benefit from up to £300 million of funding.
Thank you. Thank you.
Money that will help support the most vulnerable in these exceptional times.
Thank you. Thank you.
Food banks, local health organisations, charities combating loneliness, and thousands of other community causes will all get vital resources. Thank you.
Thank you.
And it's all thanks to you, playing the National Lottery. Your numbers make amazing happen.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I went up high school here in New York
Find these and more NBA podcasts right here on TuneIn.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P higher, NASDAQ lower, oil fluctuating. We've got the 10-year right now at 0.60%. A slide in the biggest American technology shares weighing on major equity gauges as consumer confidence crashes and more companies withdraw earnings guidance. Here's where we stand. S&P up now by 7, up by 0.3%. Has been a roller coaster ride. We've got the Dow up 108, now higher by 0.5%. NASDAQ, though, a down day there, dropping 41 points, lower by 0.5%. Apple, Facebook, Netflix weighing on NASDAQ. We've got Apple down 0.7%. Facebook down 1.5%. Netflix lower now by 3.4%. West Texas Intermediate crude now higher by 23 cents, holding right around $13 a barrel, up 1.9%. And gold is down 0.3%, $17.08 the ounce. Again, recapping, equities trading mixed, S&P higher, little changed, up now by 6. That's a gain of 0.2%. I'm Charlie Pellet. That's your Bloomberg Business Flash. Balance of power continues. Once again, here's your host, David Weston.
Thank you so much, Charlie Pellet. From New York, this is Balance of Power. I'm David Weston. President Trump yesterday laid out an expanded approach to COVID-19 testing that he says will expedite the states restarting their economies, announcing a plan to make it possible for states to test at least 2% of their populations. We welcome now a healthcare expert. Andy Slavitt is founder and chair of United States Cares. He served as the acting administrator of the Centers for Medicare and Medicaid Services in the Obama administration. So thanks so much, Andy, for joining us today. First of all, give us your reaction to what the president and his team laid out yesterday. Certainly, they seem to be ramping up their commitment to testing.
Well, they're talking about the right issue. We're not going to be able to reliably make people feel safe and opening up the economy until they are able to feel like they can go to work and hire people and do all those things without risk of kind of a big, full-blown kind of forest fire of community spread like we've been living through. So in order to do that, it's going to require testing. That's going to require some things on part of the federal government and some things on part of the state government. Congress, I think, put the resources forward. You know, I personally am looking for a much bolder commitment from the federal government to ensure we have much more testing than just to test a couple percent of the population, because that's not going to fundamentally do it. It's not going to make people feel good about. Yet, I think from where they sit today, they feel that's realistic. And so I'll call it a start. But I think we need some accelerated efforts on behalf of industry and government to get well beyond that.
So let's talk about that and first start with that standard. If the 2% number isn't enough, do you have a sense of what is required?
Sure. I mean, think about it this way. I mean, the first thing you want to do with your testing capacity is you want to be able to test everybody that's coming into contact with sick people every day. So the entire frontline healthcare workforce of doctors, nurses, nursing home workers, lab techs, you know, that's going to take you to about 17 million people. The second thing you want to be able to do is you want to be able to test everybody that's symptomatic. And today we're only testing people if they get really sick and they get to the hospital. We want to test anybody who's at all symptomatic. The third thing we want to be able to do is test a sample of the population of healthy people, because we know that something like 40 to 50% of people who get this don't show any symptoms. And so the only way you're going to catch an outbreak before it happens is if you're starting to test healthy people. And then finally, you need enough tests to test people who have come into contact with people who tested positive. So that's going to take us, those numbers are going to take us much, much higher than where we are talking about right now.
President Trump clearly wants to enlist the private sector. We saw all those CEOs of testing organizations and pharmacies and things going up yesterday, Walmart included. Can we get there by enlisting the private sector?
Oh, we have to. I mean, that's our country. Our country is a very interdependent public-private system. We need the federal government to do certain things, like ensure, for example, that we have a stable enough price, that we have stable enough supplies, that we don't have states and private sector bickering over who gets what. So there's a coordination role. There's also an investing kind of the R part of R&D role that the government needs to play, because no private sector company may find it worthwhile to do that on their own. At the same time, states in the private sector have to do everything from finding the people who need the tests, administering the tests, delivering the results to the tests, collecting the data, and learning from it. Those are the things the private sector is capable of doing. We just need to do it at much more scale with much more coordination from the White House.
Andy, as I mentioned, you've signed a letter with 15 other leading American healthcare figures calling on congressional leaders to do certain things, including appropriate about $46 billion. But I want to take us through a couple of steps because I think they're terribly important. One of them is we've come to learn the term contact tracing and what that's going to require in terms of a workforce. I've even heard it called a COVID-19 health Peace Corps, sort of, across the country. Tell us why that's so important and what's required.
Well, let's say that I got diagnosed with a positive test, and we know that the average person infects a couple people per day that they come into contact with. The first thing that I'm going to want to do is I'm going to want to figure out who are all the people that I came into contact with since I got diagnosed. And in order to and then we're going to want to talk to the people who were positive that they came into contact with. And if you think about it, that could be, depending on what part of the country you live in, how much contact you have with people, that could be quite an extraordinary task. Now, technology can help you do that. But if you don't do that, what happens is it starts to get out to the community and it escapes. And again, I'll use the analogy I used a little bit earlier, is we've been living through a big forest fire. What we want are little tiny campfires. And every time we see a campfire, we surround it. So we pour water around it, we build stones around it, so it doesn't become a forest fire, and we contain it as best as possible. We're going to have outbreaks. I don't think that's the question. The question is when we have them, when we have the tools to say, okay, it's this person here, and these are all the people that they infected, we can then ask everybody to voluntarily quarantine and not infect other people, and then we can keep the noise down while we work on things like cures and therapies.
Do you have a sense of how many people that would take? I've heard estimates as high as 300,000 people.
So we estimate it's 180,000 people across the country.
So that's in the neighborhood.
But yeah, and there have been estimates that range. I think we've seen as low as 100,000 to 250,000, and you said you've seen one higher. The truth is, it's impossible to predict the case count over the next 18 months. And let's just say we're talking about 18 months. Because it's going to be dependent on a whole bunch of actions that we take. And so what we've proposed, and this is a letter of 16 bipartisan healthcare leaders, co-led by Scott Gottlieb, who was running the FDA in the Trump administration, and myself, to say, let's...
And Bill Frist, former Senate Majority Leader, right? And a doctor himself.
Bill Frist, and a terrific person to be on the letter. I mean, I gave you the list of people, and in fact, it's the person who essentially stopped smallpox from spreading. It's the person who did the contact tracing and prevention from HIV/AIDS. It's Tom Inglesby from Johns Hopkins. It's Republicans, Democrats, Mike Levitt and Bill
Mike
Frist,
Levitt, who's a guest on our program regularly. Yeah,
who's a terrifically thoughtful person about pandemics. So the group of us, effectively said, look. This is our estimate. We know about how much legwork it requires for each case. We made an estimate. We also put money aside for hotels so that if people need to self-isolate, but they can't do it at home, maybe they live in a one-bedroom apartment with their family, and some income replacement, we put that all aside.
Yep. It's a great comprehensive plan. I must say, everyone should go read it. Many thanks now to Andy Slavitt of United States Cares. That's going to do it for Balance of Power for today. Stay tuned here for Bloomberg Business Week with Carol Massar and Jason Kelly. I'm David Weston, and this is Bloomberg Radio.
Bloomberg Daybreak Asia.
Are you seeing a lot more?
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
This week on the New Yorker Radio Hour, our writers fan out to report from across the city at the height of the coronavirus outbreak in New York.
I won't say it's business as usual, but, we still have responsibilities and we are handling everything. But, I'm not going to let COVID beat me.
That's the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
A social distancing tip.
Keeping your distance from others is important in slowing the spread of coronavirus. So here are some fun things to do alone. Read a book, take a walk, unpack your suitcase from that trip you took last September, paint a self-portrait, catch up on a TV series, do a puzzle. Remember, we should all stay home to lower the risk for everyone. For more info, visit coronavirus.gov.
Let's all do our part, because we're all #alone together. Brought to you by the Ad Council.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening. Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier, that also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Tuesday, April 28th, 2020. Carol Massar along with my co-host Jason Kelly. So a lot going on, Jason. We've got the Fed's kicking off a two-day meeting. Stocks are lower. Technology putting some pressure on the equity trade. And it's a day where we saw consumer confidence just crashing, falling apart. Not surprisingly.
It's Tuesday.
I know. It is. I mean, I have to say, I was thinking about that when we were discussing the top of our show. I'm a little stressed. I'm a little exhausted. And I was thinking, my husband said to me, this day's gone really slow. And I'm like, it's only Tuesday, John.
Yeah, exactly. In any case, a lot to get to. We'll talk about more of that on the other side of Charlie Pellet, because he's got an update on that trade. It's sort of been all over the place here, Charlie.
Yeah, absolutely right about that. Also the story with oil, and enough with this work at home stuff. I said it yesterday, and today I'm thinking Carol's coming over to my side. We've got the Dow, the S&P both higher. NASDAQ is lower right now. The 10-year up 19/30 seconds with a yield there of 0.60%. S&P higher by 3, as Jason mentioned, has been swinging between gains and losses, up now by 0.1%. The Dow up 66, higher by 0.3. NASDAQ slumping 48, a drop there of just about 0.6%. A slide in the biggest U.S. tech shares weighing on major equity gauges, namely Apple. It is down 0.7%. Facebook down 1.3%. Netflix lower now by 3.5%. I mentioned crude oil. Right now, West Texas Intermediate crude down 3.7%. A volatile session there, down 52 cents a barrel, $12.29. Latest quote on West Texas Intermediate crude. Gold is down 0.3%, $17.08 the ounce. And again, recapping, S&P up 4, up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you very much, Charlie. For a second, I thought you said, I think Carol's coming over to my house to do the show, which I really would have been a turn here in this work from home environment. I mean,
can I just tell you, though, I whine every day about having to work from home. My wife brought me in, I know, but my wife just brought me in 2 slices of pizza. You don't get that in the office.
I was just going to say, my husband just brought flowers, so I'm like, this is maybe not so bad.
Fair enough.
For the record, no one brought me anything.
Your son, our sons, bring you coffee and things. I've seen it on our...
That's true. We've seen it in our video content.
Yes.
All right. Well, Charlie, we would love for you to be back at work, too, because that would mean that things were getting back to normal.
Yeah. I could use a little bit of normalcy.
Use a little Charlie Pellet in the Bloomberg Interactive Broker Studio, that's for sure.
You know what else we could use a little bit of?
Dave Wilson.
Yeah. Let's talk about it.
Let's do it. Let's set the Business Week agenda. Mr. Wilson here with us as he is throughout the show, the author of the chart and stock of the day, here to help us set the aforementioned agenda. So, Dave, you heard Charlie do the numbers. What do you see in this trade today? It feels like a market looking for itself.
Yeah, to some extent that's true, because you've got the biggest technology companies coming out with earnings this week, and what you're seeing today, it just kind of looks like a bit of a pullback, because, they've all risen pretty much along with the market this month. And when I say all, I'm talking about, Microsoft, Amazon, Apple, Alphabet, the owner of Google, and Facebook. You've got Alphabet starting the parade, you might say, in terms of earnings for those companies after the close today. You've got Facebook and Microsoft tomorrow, and then on Thursday you've got Amazon and Apple. So there's a lot to look forward to, and some hesitation in advance of those results, kind of makes sense here.
Why? Is it just because they've all run up so much, or what?
Yeah, that's what I'm saying. I mean, you look at these shares, and they've benefited from, the market's gains this month, especially Amazon, up 19.5%, even with today's decline, which kind of tells you something. If you look at the year, it's been a bit of a different story. But if you look at the top 3 and focus on those, I mean, you've got Amazon up 19.5%, for the year so far. You've got Apple up almost 38% and Microsoft up 32%. So if you focus in on those companies, it's especially understandable that people would at least hesitate before their quarterly numbers come out.
Yeah, and it's such a funky earnings season, right? I mean, just in the sense that it's de rigueur at this point for people to pull their guidance, which is often what traders trade on and investors really look to figure out, because stock prices, as we all know, are essentially a bet on the future. And if a company is saying very plainly, I don't know what's going to happen in the future, that makes it a little trickier here, Dave.
It does. I mean, you see some cases where companies are at least willing to give you a sense of the second quarter, but they're certainly not giving you the year. I mean, even today, PepsiCo and UPS sort of joining the parade of companies that have withdrawn their full year forecasts. And, a bit of a different fortune for those shares. PepsiCo's up 1.5%, UPS down almost 5%.
Yeah, it's kind of interesting to see as these earnings come out. What we hear, it's funny. Like we've been just even noticing, and I'm just thinking about. I'm curious about the slow flow of people ordering stuff. Like it's been easier to get now groceries online. Like we've seen some of that adjusting, and I do wonder about what companies are seeing right now as people either get used to it, or they're more comfortable, or they're starting to think about coming back to the world and what that means essentially for outlooks, Dave.
Yeah, absolutely. It'll be especially interesting to see what Amazon has to say on that score later in the week because, of course, they've had to kind of scale back their deliveries, focus more on essential items, given the growing demand. And on top of that, they own Whole Foods. So they're sort of right in the middle when it comes to grocery deliveries. So to the extent that the company chooses to talk about what's happening on that score, well, it will give you sort of a broader sense of how things are proceeding. I mean, given the real shift in the way that we buy and to some extent in what we buy.
All right, Dave, you want to give us a quick tease for the chart of the day?
Oh, sure. The last couple of days have been really great for smaller companies.
Don't let us force you now.
They've been really great for smaller companies. Even today, you look at the Russell 2000 up 2%, S&P 500 is up just 0.2%. But I got to tell you, you look back to March's low, you get a different story. That's what the chart focuses on.
All right, tune in for that at 3:30 Wall Street time, and then Dave will be back with us once again after the close of trading for his stock of the day. That's Dave Wilson, stocks editor. Let's do the Bloomberg Business Week bite of the day. Carol, it's one number that tells us a lot. Today's number, cue Dr. Evil, $1 billion.
$1 billion as the pinky goes to Jason Kelly's mouth. Okay, so ex-Blue Mountain traders are set to eye $1 billion for a credit fund. Boundary Creek Advisors is a hedge fund founded by former Blue Mountain capital management traders. They're looking for as much as $800 million in new funds to kick off a new fund and to put to work really in the debt markets, which have really taken a hit here. So kind of interesting.
Yeah, well, right? I mean, what we're seeing is alternative managers hitting the road more and more. We're hearing from deal makers. We heard from Henry Cornell, well-known in the private equity space last week, about a big pipeline of deals. So certainly one to watch.
This is according to people in the know. So just so we put it out there.
People in the know. The famous people in the know. I feel like you have people in the know. Like there's this group of people in the know that you are constantly referring back to because that's one of your go-to phrases.
And you have people familiar with the situation.
Yes, exactly. They're usually not the same people. All right, coming up on this show, we're going to talk to the CEO of a big health system. This has been something we've gone to in this hour sort of repeatedly and want to get an update on the medical side because ultimately that's what it all comes down to. And also we're going to check in D.C. That's going to be really important too.
Well, what's interesting, and that's going to tee us up because in just a few minutes we're going to do a simulcast with our team over at Bloomberg Television. They're going to catch up with the FTC Commissioner Noah Joshua Phillips. And specifically, you and I, we were all talking about this earlier on our planning call. Elizabeth Warren, Alexandria Ocasio-Cortez, talking about a proposal to ban mergers during our crisis situation. And you can probably guess, but this FTC commissioner not in favor of things like that. So we're going to hear that conversation with our team over at Bloomberg TV.
We're also going to catch up later on in the show with Max Levchin. He is the CEO of Affirm, co-founder of PayPal, talking about the state of Silicon Valley, what it's like on the ground there. Also, the CEO of ClassPass is going to join us. Obviously, that business has been rocked, the in-person fitness business, but they are making do and have some new ideas about how we may be working out now and in the future, Carol.
Yeah, I'm looking forward to all of those conversations. Big picture about kind of where we are and where we go from here. All right, we'll get to that over the next few hours. In the meantime, let's get a check on world and national news headlines. For that, over to Nancy Lyons in our 99.1 studio in the nation's capital. Hi, Nancy.
Hey, Carol. Federal health officials are working on guidelines to help businesses, churches, and other organizations reopen safely when coronavirus cases start waning. Among the draft suggestions is for businesses to close break rooms, restaurants to use disposable menus, and schools to require students eat in their classrooms. It's unclear when the administration plans to release the guidelines. The president is planning to order meat processing plants to remain open, declaring them critical to the food supply. This is according to a person familiar with those discussions. Corporate managers may think their employees are mostly worried about their health, but a new survey indicates they're really more concerned about losing their salary.
The study by MetLife finds money is the top concern for 52% of U.S. workers. 2 out of 3 employees say they feel more stressed now than before the pandemic. Todd Katz with MetLife tells Bloomberg News that is especially true among those who work in healthcare or with annual incomes below $50,000. Companies that step up to support their workforces earned high marks. 66% of employees felt valued at work compared to 56% before the virus spread across the U.S. In Washington, I'm Amy Morris, Bloomberg Radio.
Hillary Clinton will endorse Joe Biden today, joining a group of Democratic leaders who are coalescing around the presumptive nominee. Clinton, the 2016 Democratic nominee, tweeted she would be the special guest for Biden's scheduled town hall on the impact of coronavirus pandemic on women. Biden has already received endorsements from his former primary rivals, as well as former President Obama and House Speaker Pelosi. Global news 24 hours a day, on air and on Quick Take by Bloomberg. Back to you, Carol and Jason.
All right, Nancy, thank you so much. We'll be checking in with you throughout the next couple hours for those world and national headlines. In the meantime, out on the West Coast, the new Shake Shack, it's the Lakers. Yikes. So the LA Lakers, they applied for and were granted one of these small business assistance loans. They got some aid. They're giving it back, but it really is bringing to bear and bringing to light some of the, shall we say, inconsistencies and maybe some of the weaknesses of this system that got stood up very fast with good intention, but it is not always playing out the way folks wanted.
So here's the numbers. So ESPN coming out yesterday and said that the Lakers got $4.6 million in bailout funds from the federal government as part of PPP, that Paycheck Protection Program. It was meant to really help out small businesses, which we know have been, shut down, hurt disproportionately because of the virus. What's interesting is, I guess, the operation has fewer than 500 employees, so it qualifies as a small business under the government's aid guidelines. But, again, as you said, it's the new Shake Shack. Harvard and Princeton didn't take any money either, but, we're seeing problems with this system to be expected, but nonetheless, it's troubling, right? Because it just doesn't make sense.
Yeah, absolutely. And it's Washington to some extent figuring out how all of this works. You've also got a big issue in Washington right now with, as you mentioned a few minutes ago, Alexandria Ocasio-Cortez, Elizabeth Warren getting together to talk about mergers or maybe no mergers at this moment. Is something Wall Street cares deeply about. Our audience, we know, cares deeply about that. So we're going to have a conversation coming up right now, Carol.
Right. Our TV team, Scarlett Fu and Romaine Bostic, getting ready to talk with the FTC Commissioner, Noah Joshua Phillips, exactly about this proposed merger ban.
Now, Democrats in Congress have a message for Wall Street deal makers, and it is not so fast. These lawmakers are pushing for the next coronavirus relief package to include a ban on mergers during the crisis, except for companies that are on the brink of collapse. Now, one of the co-sponsors of this proposed bill is Congressman David Cicilline, and he spoke with Bloomberg earlier today. He told us he's concerned about increased concentration in the market. So right now, we want to bring in Noah Phillips. He is commissioner of the FTC. We also want to welcome our Bloomberg Radio listeners to this conversation as well. Mr. Commissioner, thank you so much for taking the time to speak with us. I know that you are opposed to this proposal. Do you think this is simply political grandstanding by the Democrats, or is there substance to the idea of a moratorium on M&A during this crisis?
Scarlett, thank you so much for having. It's a pleasure to be here with you. Look, I won't speculate on why people are choosing to introduce legislation